27th of February. How are we, Tom?
Good morning, Rich. Not too bad. How are you?
Welcome, welcome. Good to have you back.
Thanks for having me.
It's been a while.
Couple of weeks. Might have had a week's holiday.
Nice.
Yeah.
Bit of a tan there.
Week in Italy. It was very nice.
Oh,
Yeah.
jeez. Hitting us.
Wasn't bad.
I see we're showing all the computers in. Can we get a bit of a zoom on there, gentlemen, please? So where in Italy were you?
North Italy.
Right.
With the family. Bit of skiing. Very nice. That's our sort of holiday done and dusted now.
Oh, that's brilliant.
It was good. It was great fun. Boys enjoyed it. So, yeah, back to the grindstone now.
What was the most surprising thing when you got back in? What were you surprised to see? The NASDAQ lower? The DAX higher?
Probably US tech. Yeah, probably the US tech.
I think a 10% drop. The Mag 7's down 10%.
Yeah, I was talking to someone yesterday. Yeah, I thought it was 8% down, and we were having a chat, the client and I, about further falls potentially, etc. But we'll wait and see, especially after last night's results.
Yeah, great. Right, what's coming up on today's show then? Well, 20 past 8. We're in early because we got a lot on today. Tom Wolstenholme on Trader Tools, and yes, you see it, a new name, Dylan Ratigan of tastylive fame, CNBC fame, is coming on for the very first time. So trade expectations, Angeline will be hosting Dylan at 8:40 a.m. 8:58, we have got Ben Hawk. I fancy Dylan probably runs a little bit late over that one and does the opening bell for us. Since we've got him in, why waste him on 18 minutes? 9:40, we got James Gordon trading experiences. But as you rightly said there, Tom, exciting night last night. Did you watch it?
Lots going on, both this morning and last night. Nvidia, Salesforce.
Did you watch it though?
Beyond Meat. I did monitor Nvidia.
Yeah. I couldn't make the conference call. I watched the numbers, but...
So I saw the numbers, I then saw the Reuters headline that actually came across the wire on our app last night as Nvidia blows hot and cold, was their exact headline.
Okay, interesting. Right, I'll tell you what, let's go into overnight action and we shall cover what happened last night. Right, so Nvidia, well, first of all, my earpiece isn't working, or Fred isn't sitting at his keyboard, one of the two. That's much better. Now I can actually hear the gallery. So Nvidia numbers, well, as Tom rightly says, they blew hot and cold. The numbers itself, it was all right. It didn't beat by 2 billion. That is the usual number. But the raise on the guidance was astronomical. And so I messaged Luke at about 25 past, as soon as I saw the guidance, and I thought, do you know what? I think the market's reading this wrong. I think it's too focused on that near-time margin guidance of 71, and it's not looking through. That 43 billion number is absolutely huge. It's astronomical. So, yeah, the stock then rallied up to about 135. That was the limit. It wasn't going any higher than that. And we saw it come off again to finish around 129. So basically, people starting to need to see more proof from Jensen. They're not trusting his word. And for me, that is a pivotal point in Nvidia, because he's never failed to deliver. So why doubt his word?
I don't know if it's doubting, but it came off, as you said, down to 129.30 last night. I had a look late last night, actually being called off 1.5% at the end. Free cash flow though was interesting. It was up 40% year on year. I'd like to know what they're going to do with that free cash flow and how they're going to invest it.
Well, they're continuing to buy back, so they're buying back another 2.5 billion shares, I think it is, or buying back 2.5
billion worth
of shares.
But as you said, revenues 39.3, so 1.1 billion, 78% year-on-year growth on revenue. They slipped in a few numbers there. Automotive revenue had doubled and beat estimates. Gaming revenue is down though.
Yeah, gaming revenue was actually one of the disappointments, and it's the
Yeah.
first sort of chink in the armor, as any of the previous 6 quarters results actually seeing a bit of a slowdown. Caleb saying that he called it.
So whether they put more investment, more time, more energy into gaming revenue, because they were down 14% year on year, 2.5 billion plays 3 estimate, give or take. Do they have a look at that?
But the question that people
numbers.
are asking is, have they focused too much on data centers now? Is the business outside data centers being left, to your device diversification is not there anymore, so it's all in on AI?
Sure, but do you counter that by saying data center revenue up nearly 100% year on year? Do you then continue with that to try and get that growth? If you're looking at it purely from a company, where am I going to get the most growth and what am I going to do? Good results. Stock down. Reuters said it blows hot and cold. Interesting to see what happens today. See if the retail market come in, pick up some cheap stock. We'll wait and see.
Yeah. Well, so I've done my numbers, and this is the way I see it. My trade today will be working out what the EPS could be worst case scenario, right? And I would imagine worst case scenario is unchanged, right? So say $3 of EPS for the full year 26. So that's this financial year.
Yeah.
So that's absolute worst case scenario is $3 of EPS. Put that on 30 times earnings, right? So you've also, as well as seeing the slowdown, you've also contracted the multiple. So that's a $90 worst case scenario share price for me. Then you do the revisions of his estimates, a lower margin, maybe 73 for the year. He's talking about higher margins in H2. Your figures are 43 billion guidance for Q1. So then go 43, 45, 46, 47, give him a little bit of leeway. That takes you to about $180 billion of revenue, 73% margin. That gives you an EPS of around about $3.90. Right? Now, $3.90 of EPS, absolute best case scenario is 40 times earnings. Right? You can't put on peak multiple and peak earnings. I don't think you can put it on any more than 40. So 40 times $4 is 160. So the stock's not going below 90 and it's not going above 160. So therefore, my trade is just a very simple, going to be a very simple sell in the strangle on Nvidia of, you could even go further out. You could say, okay, 170 down to 80, but you receive about $12 for that. Now, the month I'm choosing is October because he's talking about an increase in margins in H2 up to 75%. If he gets 75%, then you've got to change some of your estimates. But that's not going to come before the H2 numbers on November the 16th.
Post-September, yeah.
So October 17th expiry, selling a $90 170 strangle gets me $12. That is how you make 10% on Nvidia in the next 6 months.
Just writing down so I can do that.
That's at 2:31 p.m. That is the trade that I'm going to put on.
So we're not far off mid-price now then. Basis 91.70. It's an $80 delta there, 40 below. Mid-price would be 130 at that basis.
And I think that's the great thing about a business that's very complex, but it's also very simple because your order book's full.
Yep.
He's at max capacity. So numbers are incredibly predictable, which means your EPS is predictable and your multiple, is anywhere from 30 times to 40 times. So
they put the adjusted EPS on the fourth quarter results last night, didn't they? I'm just having a quick look.
Adjusted EPS was
89 cents against 84.
Yeah. So he's still beating. And this, I'm amazed that the numbers have been taken with such caution.
Moderation.
Moderation.
Yeah.
I think the stock should be up today. I think it should be 132 to 135 would be my range for the day. But I'm very happy to sell calls 150, 160 over the next few months, because there's no reason for this to go through 150.
As low as 150?
For the next couple of months. The October one's 170.
Okay.
But until the next set of numbers, this thing's not going above 150.
Yeah.
So I think the way to play this is options. It's not through stocks. Yeah. What else have you seen in maybe a little more closer to home this morning?
Yeah, quite a lot out this morning for our viewers and clients to have a look at. Just off the top of my head, WPP, Ocado, London Stock Exchange, WPP, Metro Bank, Taylor Wimpey. So lots of big names out there this morning. Some mix of results, but quite a lot of actual final year results are out. I was having a look at Taylor Wimpey earlier as well. It's quite a popular one with our clients as well, Taylor Wimpey. Revenue meets estimates. They got their full year results. Revenue's about 3.4 billion versus 3.37. Very tradable retail stock, that. And it said that it had year-to-date net private sales were going well. Order book was at 2.25 billion. And they see a bit of build cost inflation coming in as well.
Right.
WPP as well was another one.
Let me get that one up. Okay. Right. How are we looking on WPP? Go ahead.
Such a large conglomerate. Obviously, its main revenue stream is advertising, but it is just such a large media company. Revenue 11.36 billion versus 11.48, so small miss there. Revenue down 1%. Operating margins coming in at 15%. Revenue growth they're seeing at potentially -2 to 0%. So they're looking like strong headwinds this year to try and get any further growth possible. Mm-hmm. They're starting to build up more in Western Europe as well. So, WPP, quite a major player here in the UK, one that our clients trade quite regularly as well.
Right.
And one other, I think, worth clients having a look at, or a couple of others actually, Aviva.
Yes, let's have a look at it.
They had, they've announced a final dividend as well, but they had their results in today. Operating profit, up 20% year on year. Not bad, 1.77 billion versus 1.71. They've got operating EPS 48 versus 40. Decent result, with the directors proposing a final dividend as well of 23.8 pence per share. Aviva, always a popular one with our clients as well, one of the more liquid stocks in the FTSE 100.
And where our CFO used to learn his trade, let's say.
Correct. Yes, indeed. So keep an eye on Aviva, and the shopping favourite, Ocado. Final results out.
Is that your shopping or?
Not mine per se. I'm more a grounded, humble man. I'll probably be
Thanks, guys.
down at Asda or Tesco's probably. But Ocado, revenue 3.16 billion versus 3.12 estimate. Retail sales were quite strong. They have got full year EBITDA that's beaten estimates as well. It is on there as well. And it sees more technology solutions coming in, and retail sales are up about 14%. So probably from a sort of UK FTSE retail trading point of view, keep an eye on Ocado, Taylor Wimpey, WPP, Aviva, and also, sorry, I must mention Rolls-Royce.
Well, I was waiting. I thought that was your crescendo.
The rollers. Rolls-Royce full year adjusted revenue 17.85 billion versus 17.24 billion. Launches a 1 billion share buyback. Sees 2025 adjusted operating profit 2.7 versus 2.9. Sorry, and dividend of 6p has been announced in respect to the full year.
It's funny, isn't it? Because a 6p dividend at £2 is decent, but the stock's gone up so quick that a 6p
Yeah.
dividend's a bit, okay, you got any more for me?
It's not a bad set of results though. We'll wait and see. But
Yeah.
£6.30 stock now. So
That's it. Your 1% dividend. Thanks very much.
indeed.
Right, let's see what we've got happening on TradeGate this morning then over in Germany. Aviva down 1%. We've got CRH up 1. Got a lot of early calls this morning. Ferrovial up 1. Let's see if we can get LSE, so London Stock Exchange Group, down 2%. Total income there of 8.49 billion. Pre-tax profit 1.2. The CEO on CNBC this morning saying there is no chance we're looking to sell the London Stock Exchange part of the business. That's where we get a lot of our data from. So very good to hear that our local exchange. Ferrari, down 5%. Ferrari has
See that?
seen,
What's that on the back of?
it's a stake sale by Exor. So Exor have sold 4% Ferrari stake for 3 billion euros, and that's looking down 5%. Am I reading this right? Rolls-Royce looking up 10? Has anybody seen Rolls-Royce called up 10%?
I still think it's too early. 7:45. We'll get something at 10 to 8 for the auction.
That's an early one, isn't it?
That is a bit early.
SAP in Germany down 2%. That's on the back of Salesforce numbers, which we will cover shortly. Do you want to go into Salesforce now?
Yeah, down 10% last night.
No, I don't think it was that bad in the end, was it? I hope not, because I'm short puts.
Apologies. I thought it may have been.
It was down 10 at one point, but it did rally, so it was only down 5. It was as low as down 10.
Yeah, at 9:10 last night, Salesforce slumped 10% after full year revenue.
Yeah, because I'm short the 280 puts, and it traded 279, and that was not what I was looking for coming into Nvidia results. I'm starting to worry about Salesforce, but you see, it was only there for this. This is the when you know what the expected move is in the options market, then you see it spike right down there. And if the numbers aren't that bad, then that's your opportunity, because it traded 279 for about a minute, and then it was back up to 290.
290 is where it closed, yeah, down 5.5%. Obviously, a miss for Salesforce last night, and numbers down. Stock, as you say, tumbled down to, was it 279 low, was it?
270, well, 276, but that was like one share.
So do you see that level again today?
No. I think that's you. They actually rallied back up to 305 afterwards, but then the call was just. The problem is they've got a new CFO, and COO. So the tendency to give cautious guidance on your first time round is obviously very tempting. So I think Salesforce still good, still believe it in the longer term, but I will be happy to not get hit on that, because it's Friday expiry as well, so it's a short-term one. I might just get away with it. Boise asking, good morning everybody in the chat. Good morning, Juger. Boise, Andrew McKelvey asking for views on Aviva results. Let's see what we think of those in a second. Going back, just lost my chat again. Thanks, guys. And any views on Man Group? Man Group, of course, buying GLG in the past as well. It's a behemoth now, isn't it?
It's huge now. Just going back to the thoughts on Aviva results. I mean, headline numbers, operating profits have beaten estimates, as we said. The results look reasonably strong. They've obviously declared the dividend. I think full year insurance revenue, that was up as well. So, to me, they look a strong set of results.
Okay.
I think we'll be getting an early indication in about a minute's time from the exchange on what the auction might say and where people are putting in their bids and offers. Closed last night for everyone's guide at 524.5. So we'll wait and see.
Okay. Right, answering Boise's question here. I'm going to set it up for you on the Tasty platform, take you through exactly what I'm going to be doing at 2:31 p.m. I will go down to the October expiry, so that's 232 days away. And this, of course, much further out than I normally trade. Normally trade on about 45 days to expiry, but this is an exact pinpoint trade because I want to get as much premium as possible, but I also want to have the expire before November H2 results. So I go up to 170. You can see at 170. Obviously, some of the vol's going to come out, and I'm not going to get $9.70, but I think I'll still get $9 from that.
This is a strangle you're doing here.
This is selling a strangle,
Yep.
exactly. Yeah, thank you, Tom. So hitting the bid on that 170, then coming back to...
Is it 90?
90... Let's go a little bit, because the market, let's say the market has a shank down.
Yep.
Don't want to get hit on the vol as well. So selling at 85, and I would imagine I'll probably get about $2.50 for that. So all in all, it shows $12.70 received there. That's going to be more like 12.
Yeah.
And then the question is, when do you get the, well, sorry, first of all, the max profit, 1,274. The margin taken, the BP effect, is 2,500. So it's a 50% return on your capital, right? So I like those numbers. But no, you do not get it straight away, as was suggested in the chat. It is just, it's a position, right? It sits on your book and it trades just like, you know, a stock will. It goes up and down every day. You have a mark-to-market profit and loss. But of course, theta is coming out of it each day. So you'd get $6. If your max profit is 1,200 and you've got 250 odd days to the expiry, it tells you the theta here is about $6 a day.
Yep.
Okay, so that's all you actually receive is $6 a day. But I'm happy with that. Nice little Monday morning, get my $20 in, pays for lunch, just like you're gonna.
It does. Or on the Lloyds, that is going to trade above 70. Another quick one we've spoken about before as well, and you said at the start of the show, at the top of the show, you said, I haven't been on for a while. I think on our last conversation, we touched on Alibaba.
Yes.
Can I just say what a fantastic run it has had? We were talking about it at $90, if not a wee bit lower than that, maybe 85, 88. It's traded above 145 last week, come back to 135, traded 141 last night.
Oh, did it?
Closed at 140.60. Just for the viewers out there, if you're looking at a stock with a run up from, I would almost say, to the point of Trump's inauguration, so from January the 20th onwards.
Well, it was really DeepSeek, wasn't it? DeepSeek
moved everything forward.
Yeah.
But Jack Ma is now back.
Oh, is he?
In society. He hasn't been hiding away as much. China seemed to be wanting to have a look at promoting Alibaba a little bit more. Some of the rhetoric coming out of it is that Alibaba should be, especially on the web services, it's huge web services in China, should be more prominently out there. And the stocks had a $50 movement in 3 weeks. And it's got 14 buy recommendations on tip ranks, no sells, with an average price above 170. So just looking at that information with the strong street analyst recommendations there, it's one to still keep an eye on. And
this being the big story in the Financial Times, DeepSeek spreads across China with Beijing's backing. So this is the thing about a regime such as China, right? Imagine we wanted to install ChatGPT or Claude within the whole police force, the NHS, you know, it would take 2 years.
10.
Yes. It's taken China 2 months.
Yeah.
A month, 2 weeks to get DeepSeek throughout the whole government, local government and state-owned enterprises.
That is partly because how they run the country and the authoritarian manner, let's say. But you're absolutely right.
Well, if it's going to save your life,
Yeah.
if you're sitting in a hospital as opposed to...
There's an argument to say, is that the correct way to do things if they're going to do it for the people?
Yeah.
And you're absolutely right. I joke 10 years, but trying to implement anything in the NHS will take years and years and years.
Yeah,
and
as long as the waiting lists.
And the amount of funding as well that's involved.
Yeah.
But just one for you, Rich. Keep an eye on Alibaba. Maybe one to talk about in other shows, but definitely one to keep an eye on.
Excellent. It just reminds me, big shout out to, we've got a viewer who is an ambulance driver.
Right.
And what an absolute hero. You know, my absolute heroes. That is quite the job. We met on the Tasty trip around the country. And yeah, big shout out to you this morning, sir. Right, quick break. We're going to have 2 minutes. We're going to be back. And Tom Roberts is going to be back opening the London Stock Exchange on the day of London Stock Exchange results. Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the Close button next to the relevant trade.
Welcome back, welcome back. So we are just 90 seconds away. We're going to be looking at Rolls-Royce, Aviva. Can we get Nvidia trading in Europe? Does it trade in Germany? I think we can get an indication of what Nvidia will be trading at.
On our platform.
No, sorry, yeah, not on the platform, but we'll get some kind of read through.
Okay.
Good stuff. Right, my call for the day is 132 to 135. I did buy 100 last night. Couldn't help myself at 130.30, I think it was. 130.95, sorry. So I'm hoping they don't drop too much lower.
My range is 127, 132. There you are.
Perfect. Right, so I'm going to be buying from you at 132. Right.
That's fine. That's fine.
Got about 45 seconds there. Let's see Lloyd's. Can it continue on its magnanimous run?
Come on, 72p. Come on, Lloyd's.
We've got it. We've
got an expensive lunch coming up, Rich, as well. Remember?
I think we're going to have to go back and run the tapes. Producer Fred's going to find last time that you were on, and we're going to run the tapes and see what the bet actually is.
I thought it was above 70 by March, and we're still in February, but I might be wrong.
I think it was me that was calling that.
I was definitely above 70. I said it was in everyone's pension. Everyone should be buying this.
Right, 5 seconds. Get your bell in your hand, sir. Get ringing. Well set up. Okay.
Let's take a quick look at Aviva on the open, actually.
Right, Lloyd, speak of the devil, 71 it got to yesterday on that continued breakout.
Aviva up 2%.
Aviva up 2, Tom Roberts telling us.
536 trading.
Also, we're getting shout in the ear. Missed it one more time, please. Barclays down 2.4. Barclays down 2.4%. Ferrari down 5 on that placing. So what happens in a placing is that when the market closes, the banks call round all the clients and say, right, oh God, we've got, can you still hear me? We've got 5%, 4% of the company to sell. At what price would you be interested in buying it? That's why they're down 5%, because there's basically a fire sale going on.
They're repurchasing up to 10% of Exor, offering up to 300 million, I think it was, 300 million euros.
Do we have a price?
Ferrari are now trading indicated 450, down 6.8%.
Right, the guys are going to go full screen on the platform so we can see all those trades this morning. Tom Roberts, do you want to run through a few more of them?
Yeah, not sure if the viewers should take this with a pinch of salt. Not uncrossed as yet. Rolls-Royce up 19%, 748.
Somebody phoned my girlfriend. She's going to be going shopping today.
Now, for all the viewers out there, it closed at 6:31 last night. There is an indication, or an uncrossing as we call it here in the auction, where the buyers and sellers try and match each other off at the 8 a.m. open. Still not open, Rich. 21.5% now, 764.
Right, you get some there.
It
764.
feels high. 750 is coming through as a matching price, which for everyone out there is 19% up from the close last night. I'm
going to sell.
That does not mean that it's traded there as yet. That's still an indicated auction.
So 2000, it's 760, did you say?
743 indicated now, up 18%.
Right, I'll go in at 747. Would seem appropriate.
Seems.
I'll go in at the 767.
So, I mean, adjusted revenue beat estimates, but that feels high.
What? I mean, yeah, that's for a stock that's already moved. That is an incredible, absolutely incredible. But we won't find out for another 3 minutes. So let's look at let's take a quick look at the upgrades, downgrades this morning. What have we seen? SocGen overweight, 46 euros. The downgrades in the retail sector, Moncler cut to market perform from outperform. H&M cut at Barclays down to equal weight. That's the second cut in H&M in 2 days. That's very interesting. Ooh, clearly not seeing too many upsides at Henny's Moritz. Just Eat, that's boring, isn't it? That's well done, Deutsche Bank. You have cut your rating and target price to the price that there's an agreed bid at. Jeffrey's 52 cut in Renault. Right, let's go right back to the prices and find out. We've got Aviva trading up 1.3. We have Ocado down 6. Ocado down 6%. Barclays down 3. Diageo down 3. Why's that?
Why DG's down? Let's have a quick look.
There's a lot of big moves this morning.
Yeah, 3.2% on Diageo.
Right, somebody huffing in my ear. Sounds like Caleb might be long Diageo in his pension.
Let's see where Taylor Wimpey is as well. TWs.
Right, Halford's up 80 basis points. BAE Systems. That's interesting. If Rolls-Royce opens up 15%, what is BAE Systems going to do? Because often that is a big pair, right? So if you are, for example, short Rolls-Royce, long BAE Systems, you're going to get stopped out on your rollers, I would imagine, which means you may have to sell your BAE?
Yep.
Don't know. Or does the relative value in the sector suddenly change?
BAE obviously had a good move on the back of the increased defence spending
Right,
this week.
Sorry, we should get first trade on Rolls-Royce any second. Now, actually, no, because if it's above 10%, it's 10 past 8, isn't it?
Yes, and still indicated 16.7%.
And what level's that?
736. Oh, it's uncrossed. 730 traded. 735 high, 16% increase
Right, I'm
on
going
the
to
share price. For the viewers out there, touched 735, which was a £1.04 up from the close last night. Hovering around up 15%, trading 727 at the moment. Whether people will give this a small hit or not,
wide berth.
or just a small hit, think it's too toppy at these levels, who knows? But
That is incredible.
that's stock of the day, isn't it? I mean, that is.
Do any of you have Rolls-Royce still? Who has absolutely nailed this, owning it from £1.50 up to Rolls-Royce, saying they're 2 years ahead of plan? I remember when they first put out that plan, it was a fairly, it seemed aggressive at the time. Some would say, a bit pie in the sky.
Pie in the sky. Very good, Rich. Very good.
But
Still quite early.
They're 2 years ahead of that plan. So up they go, up 15%. Now only 14,720. Got to admit, I think you'll see more sellers than buyers there.
But as you say, if you've held this stock, you've done exceptionally well. It's had a great run. It feels to me like this might be slightly overdone at these levels. So we'll wait and see.
We've seen the high of the day, and that was the uncrossing, I would imagine.
Yeah. Just quickly on your targets as well. Barrett Redrow raised to buy at Deutsche Bank, just to let the viewers know there. Price target 536.
Okay.
Diploma rated new buy at Redburn, £54. And Dr. Martin rated as new buy at Berenberg, £1.02.
Brilliant. Julian Musto buying Rolls-Royce at 85p. There is the hero of the day. Arsik Senna's got it as well. Well done, you lot. Absolutely fantastic.
Julian
What's your
Musto
sale
is
price?
buying lunch. I mean, that is strange.
What? Because the thing is, if you bought it at 85p, right? Let's say you put in even £850.
Yeah.
You've now got £7,000. Like it's become a position. You buy £8,000 worth, you've got 70,000.
I mean, it's almost a 10x stock, which for Rolls-Royce
On
is
the FTSE.
unbelievable.
And people say the FTSE is dead. Come on.
Lloyd's down, Rich. Disappointing. 70.9 trading, down 1% on last
Had a big
night.
day yesterday.
It
Big
did.
day.
It did.
Look at these stocks that are getting killed though. WPP down 15. That is a little bit unexpected there. Not what I thought they'd get from publishing those results.
Just revenue was only down 2%. So, yeah, that feels overdone, actually.
Producer Fred, have we got any dividends this morning? Is Diageo a dividend?
Declared a zero dividend, I think.
Well, I'm wondering if it's Thursday and we've got some big moves. Are some of them dividends? That is the question. Because these do seem... Diageo seems a bizarre move for me. I don't really understand that. Right, what else? Kingfisher down 1.5. ITV down 1. Yeah, just general weakness across the board this morning.
London Stock Exchange up 3% this morning.
Nice.
Now. Yeah, trading roughly 114. 114.
Okay, right. So they are. So when things don't make sense, there's usually a reason. Barclays RX dividend, Diageo RX dividend, and Unilever as well. So that's the big chunk coming off these. Like, thank goodness. I thought I was going mad there. I thought we had missed a story this morning.
What was the FTSE adjusted by accordingly?
Yeah, because if on those results, the FTSE should have been down way more, but it's not. Down 15 basis points, we're seeing the FTSE, the S&P, up 40. So despite Nvidia, the little bit of caution, the S&P breathing a sigh of relief, that AI is still on track. Nasdaq up 40 basis points, and gold down 1%.
Gold 28.87 off 1%. Probably has been too high and has needed a bit of a pullback. We saw way above 29.30. And where's it come up from?
Probably an interesting trade yesterday was short gold, long Bitcoin. Of course, not on leverage.
No.
But if you were swapping out of one ETF into the other, because Bitcoin 86,000 traded, it got down as far. Well, let's have a look exactly where it got down to on the lows. I think it was 85,000 on the lows. Ether got down sub 23.
Bitcoin touched 82 yesterday.
82,000. Oh, wipeout.
82,000 yesterday.
What MicroStrategy? I looked at MicroStrategy last night and it was up 1%. How? How was it up 1% when you've got 85 trading on?
Was that pre or post the Nvidia results?
That was pre.
Okay.
Admittedly. But yeah, incredible stability in MicroStrategy share price. I mean, it was down 10% the day before, but still, I would imagine this thing started to, really feel the huge leverage they have on their balance sheet.
No, indeed. 264 on MicroStrategy last night as well.
Yeah.
Coinbase has taken a bit of a beating recently as well. That's been off quite a bit, trading down at 212 last night, coming off its highs. Just having a quick look at the commodities as well, Rich, today. As I say that, I lose my screen. Apologies, everybody. But
Blake 7 saying he's just sold Rolls Royce at 619. Did you mean yesterday or do you mean 719? I do hope it's 719. Easter. Is that IFA out there? Easter. Unfortunately, I bought Rolls Royce at 60 pence in 2022. I don't know what's unfortunate about that, unless you sold it at 62 pence. So yeah, quite, incredible there. Right, I do hear Tom Wolstenholme in my ear in the gallery. Funny story about the rugby. So we were at the Scotland-England on Saturday. There wasn't much funny about it, but one thing was, one of our attendees at the rugby said to me, "Oh yeah, that guy Tom, he's quite good." And obviously I thought you straight away, but he was meaning Tom Wolstenholme. He says, and we've actually got a Tom Wolstenholme who works for us as well. There's two of them.
There's two Tom work from homes.
There's two Tom work from homes. This one goes into the office a little bit more, I think.
He does.
But Tom Wolstenholme, the real Tom Wolstenholme out there, if you're watching, we've got an open invite into you to come in and do a segment with Tom Wolstenholme.
Do the double act.
Do the double act.
Absolutely.
It's that, can they be seen together? Are they ever seen together? Is he moonlighting on another job?
If you get another Rich McDonald out there as well, even better.
We did actually start a group message on Facebook once.
Did you?
7 Rich McDonalds.
Did you?
Yeah.
You do the double act.
Children's play.
Oil
He's there. He's on the chat. Tom Wolstenholme. Tom Wolstenholme in the gallery. Meet Tom Wolstenholme on the chat. The real one, obviously. You can battle over which one spells their name correctly. Right, last look at these moves today before we go. Ocado down 10. Ocado down 10%. WPP down 16. John Wood down 3, back down to that 35 level. Oh, I see Tom Roberts' eyebrows.
No, just looking at BP, oil's up. BP obviously in the news recently.
Disappointing, wasn't it, really?
It wasn't quite what people were expecting, and positive, small positive this morning, up 0.2, oil up 40 basis points, Brent and US WTI Yeah, trading 432. Just one to keep an eye on, I think, BP. Just
Definitely.
see how they go.
Because do you see more activism? Do you see more talk of a potential bid? You know, does Auchincloss go?
I think...
Or the chairman? More likely the chairman, probably.
I think there will be more activism going on with this. So we'll wait and see, but one to keep an eye on. We had quite a bit of business in it over the last couple of days.
Excellent. Right. We are going to stick to the time today because, yes, we've got our first celebrity on the show, Dylan Ratigan, joining us just after we get rid of Tom Wolstenholme once he's done his bit. So we'll see you after, but stick around. We'll be back in 3 minutes.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Hey, trader friends, show posture, darlings, show posture.
It's like being at finishing school. Afterwards, we can do elocution.
Yes, we can do.
For today, posture.
Culinary settings, formal or informal or modern. Apparently there's modern now. Back to the show, guys. Speaking of modern, Nvidia, what an evening. Calling out Steve Davies out there. If you slept late, was it because of Nvidia? I definitely had slept late and also had a bit of indigestion after seeing the
Too much information.
huge volatility moves. I mean, this is one time, I know we talked about ATRs. Might want to, flag this up. This might be one time when the ATRs just, are not sort of indicative of, how far to put stops. You really have to be on the ball with such high vol. Let's have a look at the chart, people, to remind us of what it was like yesterday. Right, here we are. It is quite painful there. And I have to say it was painful for me too, because I am now currently still sitting on that. I thought that it was relatively good, but what was your play on it, Nvidia?
Oh, I didn't play. I went to bed.
You went to bed?
Yeah, I need my beauty sleep.
What did you think of the earnings? Because it was really all over the place. It meant the shares were all over the place too. And I wrote a nice note for myself too to remind Ange to wait 10 minutes next time we get to earnings before placing a trade. But really, it is petering off right now. It's coming off. Where it was, it fell, then it spiked up again, and then it kind of did this in the range trading. So I do agree, Rich. I think for Nvidia in the coming months, maybe, options is the better way to trade this for the next coming months.
Yeah, because they ever so slightly beat forecast, didn't they, on their earnings? 89 cents a share. Forecasted was 84 cents a share. And so what? So we kind of settled it around what time then was the earnings there on your chart that you're looking at?
This is the 1 minute. Do you want to show the daily? That is the daily there.
Okay. So big move yesterday.
Yep. And also, do you want a monthly chart?
I'd love one.
Let's have a monthly chart up there for you. So what did you make of the numbers? Because I think, we were talking about this earlier, the markets are incredibly cautious given what has happened and what they've announced in terms of their margins, their outlook as well, and also expected growth in sales.
Well, I was going to look at a couple of things with you.
Let's put him on full cam here. Yeah, let's pull Tom. Full screen.
Full cam, is that on you for it? Full screen. So this is the Nvidia chart. Something I think is quite interesting around earnings is you see how I've turned this on down the bottom. Have you seen this before? You can turn on your little.
I'm just gonna keep going. I'm just gonna grab my mobile because I've got some. Yeah.
Right, you leave. I'll stay here.
Yeah, you stay.
So what I was looking at is the fact that you can add a little earnings marker on. I've ticked this on here, which is company earnings, and if you tick that on, you can see when earnings are happening. So for example, you can see down the bottom there, we've got earnings have just happened, and it shows you when the last earnings was. And what I think is quite interesting is if you turn on volume, by going up here to our indicators, and just completely left the building, it looks like. If you turn on your volume down here, you can see the volume traded. And I think this is quite interesting around earnings, because if you can compare earnings for right now to earnings as they happened last time. So last time, for example, Nvidia had earnings was back in November. And if we have a look at, hello, Rich. And if we have a look at, for example, last time they had earnings, if we go back, if I can find it, we can see here, you can see what happened last time.
Yeah.
And you can see how that volume changed around about that time. So you see after the earnings is when you saw a lot of the volume being traded. And as we come up to now, we've obviously just had the earnings come out. So I guess we're yet to see how much, because you can see just afterwards, it's still quite a low volume bar, isn't it?
Yeah.
But yeah.
It was surprisingly unvolatile, let's say. So it's looking down 1%, 1.5%.
So okay, so we're saying it wasn't as volatile as we expected.
By a long way.
By a long way. Because something we were talking about just before, which I think is interesting, which I haven't really looked at that much before, is if we were to look at the Nvidia options chain, if we take the weekly one, you were explaining to me before about how this IV works here, because we have this IV here. So this is the implied volatility value, and this is the weekly Nvidia option. And this is a measure of how much we expect the stock to move, right?
Exactly.
But it will change based on your strike, and it'll also depend on your expiry as well, right?
So I guess the way to look at it is the expected move is derived from that implied vol. And the implied vol, and just a really quick, cheap and nasty look at it is Tom Wolstenholme, do weekends matter or not?
For your mental health, yes. For the stock market, yes, because things happen over the weekend.
Interesting. So this is the big debate, right? And Tasty say, yes, definitely, you have to count weekends because things can happen, especially with Trump in the White House.
You know, it doesn't take a day off, does he?
Absolutely not. So therefore, you divide by around about 19. So take that implied vol number of 148, divide by 19, and that gives you your expected move.
Okay. Right. And the reason it's 19 is?
So if you take the square root of the number of days in a year, then that is 19.
Yeah.
If you take the square root of the trading days in a year, then that's 16.4.
Okay. So let's say
depending on how many bank holidays you have.
So if we just did trading days and we divided this 150 by 16, which is about 9.
Boom. Nice. Right. Your maths has improved.
Oh, okay, because I practiced beforehand. Don't tell anyone. So that 150 divided by, we get the answer of 9. Is that saying we expect the price of that option to move by 9?
By 9% by that expiry.
By that expiry.
So the expiry is built into that, and it says by Friday, the expected move was 9%. That'll get crushed today now, and it'll be a 4% expected move. So therefore, the values of all those options get compressed. So if you're short options in Nvidia today, you are popping the cork.
Okay, because more volatility means the price of the option goes up, and if you're the seller, you want a high price to come down, right?
Yeah, exactly. So you want, you want the vol to be this instead of this.
As the seller.
As the seller, exactly.
Okay.
So and they'll make a lot of money today. And if you're short the wings as well, if you're short something like a 115 or a 140, those options are pretty much worthless for Friday now. So you've made all that money from being short.
Okay. So anyone that had bought, so you're saying anyone that had sold options yesterday
at the wings.
At the wings. So much above and much below the strike, they're doing all right today.
They'll be very happy. Strangle sellers will be.
Okay. Was that you?
No, I do a little bit of both. I sell a strangle, but then I buy a call. So net, they figure off. I was expecting it to go up to 137, 138, so I was playing it for that.
Okay. So if we changed from weekly if we went to March, we can see the volatility is much lower.
That's right.
So that's interesting, right? Because that's saying that by the end of March, or the 21st of March, we expect it to have moved a lot less.
Per day.
Per day.
So you've got 1 day of a 9% move, but then you've got another 20 days of a 3% move.
Okay.
So it all nets off, and therefore the longer until the expiry, then it can be the lower vol.
The longer till expiry can be the lower vol because it's less movement per day across a longer time
across
period.
the whole lot, and then you average it out.
Interesting. Okay, and then if we went to April again, okay, similar. So the volatility there, implied vol is similar there to the March, but I guess you're getting quite far out then, so the change is going to be minimal.
That's right, and that 9% becomes less important the further out you go, because there's not another earnings for another 3 months. So,
Okay.
and this is why, if God bless her soul, the day the Queen died, and suddenly there's an additional bank holiday, then that changes options pricing.
You'd have to take one off the number you're dividing by. We all agree that that definitely isn't a trading day. Okay, so people have different rules then, do they, about whether they factor in?
Yeah, I mean, it's all theory, really.
Yeah, because it's just a made-up number, right? It's just, and I think the implied vol is just dependent on, it's directly linked to the demand of options, right? So as people are trading options, that's what's changing the vol.
Well, it's expectations, because the implied part is what it's all about, right? And all the implied is, right, what's my expectation of you working from home? How many days next week?
2 out of 5.
Well,
2/5.
But is it though?
Is it? We don't know, do we?
See,
There's
that's
illness.
the volatility.
Yeah, okay.
Yeah. So every single day that goes by, then you've got an implied. But then the actual RV,
Realized vol.
then usually, in the grand scheme of things, which is what the whole tasty theory is built on, realized vol tends to come in below implied vol. So if you sold every single option in every single product, then you're going to win.
Because the implied vol is always much higher. People expect more.
No, it's not always much higher, but in the grand scheme of things,
Across all.
the law of large numbers,
Yeah.
realized comes in less than implied.
Okay. That makes sense. So then running up to earnings then, if your view is that implied vol is, let's say, too high, that would kind of instruct what kind of position you would take, right? Because you'd see a number of implied vol, you'd think, I think that's a bit high, a bit low.
It's exactly what ESAR did this week. He thought the implied vol was too low because it was at 6% last week before we had this kind of sharp move down in the NASDAQ. So he thought that was too low. So therefore he bought vol. So when you're trading options, you can think of it like, right, I'm buying vol or I'm selling vol. Or if you're doing, maybe you're buying a call and selling a call, then that's a vol neutral strategy.
Okay.
So then you're actually trading the movement rather than trading the vol.
In terms of like definitions, people always say buy vol, sell vol. If you're buying vol, is that just buying a call or a put?
For example, buying a naked call at the 135 level you would have been long vol.
Because you're buying an option?
Because you're spending because you expect the realized move to be greater than the implied move.
Okay, and if you're selling vol?
The opposite.
Yeah.
You think that it's going to be less. So for example, I'm short Salesforce puts, right down here at the 280 level.
Okay.
Now, the stock was $304 and they didn't have good numbers, so it dropped and it hit 280. And I thought, oh God, here we go. Now that was the expected move. So it actually got down there, it bounced, and it's now trading 290. So I might actually not lose money today, even though the stock's dropped, because it dropped by less than the implied vol of the whole move.
And it hasn't
get away with it.
So it hasn't reached your strike.
Hasn't reached the strike. Stock's going to be trading around 290, and my short puts are at 280, but they're for this Friday.
Okay.
So the chance of it dropping another 3% before Friday, I might just get away with it, even though I was completely wrong. And that's what I love about options.
Oh, okay. So we've got Salesforce here. So Salesforce weekly. So which strike were you?
I'm short the 280 puts.
Short the 280 puts. Okay. So this is you up here, roughly. Okay. Implied vol 97. All right.
So if the implied vol is 97, what was the expected move?
97 divided by 16. Just over 10, 11.
About 6.
About 6?
Yeah.
Hang on, so you're taking the 97,
Divide by 16.
divide by 16. Okay.
So a 6% move is the expected move, and the stock's down 5. So I sold the puts outside the expected move. So I thought, in the grand scheme of things, I think the numbers are going to be positive.
Yeah.
And I think I've given myself a little bit of leeway by selling the put outside the expected move. So if I'm wrong, the expected move, still won't kill me.
Yeah. So you're basically betting where it won't go.
Exactly.
You're saying, I don't think the stock will go lower than this.
Yeah.
But then the earnings came in yesterday, didn't they?
And the stock's trading 290 now.
So yesterday, Salesforce. So it came in at...
The numbers were all right, but the guidance was a little bit cautious.
Yeah, which is why I always find it interesting. Whenever you look at like a view like this, it often shows the results for the previous quarter. And you've always told me, it doesn't matter. It's all about the guidance. It's all about the forward look.
Exactly.
So why in stock screeners do we always put the actual realized number when it seems what people care about is the forward guidance?
It's because it's really hard to say what's important, right? Like Nvidia, for example, you'd say, right, the forecast of the forecast of the guidance is $42 billion. Now, Jensen's come in and smashed that, and he said, I'm guiding towards 43 billion. So you thought the stock should be up 9%. But then the margin is weak. So the margin's lower than expected. On the gross margins, it's about 72, or even 71, and 72 was expected.
So basically on a case-by-case basis, something else is going to be important. So you'll never know. We need some kind of advanced tool, don't we, where for each stock it kind of says, the important thing here is the guidance forecast, for example, or for a different stock, that's not important, or you know what I mean?
But you're forgetting that it's an art and not science.
Because you're just...
Every company is a story.
And you're picking the metrics that you think are relevant at that particular time.
Exactly. And we're just storytellers.
Yeah.
Not everything can be put in a spreadsheet, Thomas.
Yeah, sure. So you need the story as well as the numbers to bring it to life. Makes sense.
That's it. All done?
All done.
We can go back to Angeline.
What happened to it?
I was magically just about to go out and get a coffee.
Yeah. And what happened to it? Are we bringing it back in? This is live TV for you, isn't it?
Right. So that is Tom's. What's your section called?
Let's go Tom's Takeover.
I think so, yeah. I think we stick with that. It's not trader expectations. Good stuff. Right, Trader Tools and Tom are going to be back on Tuesday, sorry. But after the break, Angeline is going to have Dylan Ratigan on the show for the first time. It's an exciting moment for Trade Live with IG as we do our combined Tasty and Trade Live with IG takeover.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investment. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, trader friends, welcome to Trade Expectations with myself. And we have a special guest with us today. It's like welcoming royalty here, Dylan Ratigan. Welcome back. How are you?
How are you? How are you?
Well,
It's so nice to see you. I'm looking forward to coming to see you guys in person.
I know, it's like
So, but
old
it's nice to see
times
you.
again. For those of
Yeah,
you, of
exactly.
course, you all know ex-Bloomberg and so many other things to your mantle as well. I mean, like, what have you not done? You run for office. You have got a sneaker company. You've also got a hydroponic gig going as well. Tell us about that.
Yeah, well, the first thing that I did when I left NBC, so after obviously when I left full-time broadcasting, I guess you would call it, I started a solar-powered hydroponic farming company in Louisiana, which was really my first foray into industrial design and business. And so anyway, that's turned into a small, not a big business, but it's a small business in Louisiana and led to a life. I've been probably through 70 countries now over the past 10 years, sometimes for pleasure and sometimes for business. But that was the beginning of my business career, was solar-powered hydroponic farming. Some interesting lessons were learned along the way there. One being, don't do business with the government if you can avoid it.
I think a lot of mining CEOs watching this will agree with you currently.
Yeah,
but
I'm
you know,
sure.
we're in interesting times, and you're very brave for starting businesses in such uncharted territory and uncertain waters. You know, we've got inverted yield curve, we've got stock markets that seem to just keep heading higher until we get a shock. Of course, we had DeepSeek recently, and Trump tariffs as well. That Trump tariff tantrum recently, one of many. Of course, you've got a rather interesting president as well.
Yeah, I mean, I always appreciate your sort of the British diplomatic characteritions.
It's due to the rain.
We do
We've
have a
become
rather
like that because of the rain. Yeah.
very sort of, America does have a rather interesting president. My biggest concern, all jokes aside, is not that the American president is actually going to do much of anything that he says or that he talks about doing, so much that businesses, I mean, even the businesses that we have here in Italy, and our businesses are comparatively very small, but are from businesses like ours, like an Italian sneaker business, up through the biggest businesses in the world and everything in between, are increasingly on the margin looking for ways to do business that is not with America. I mean, obviously that everybody's going to do business with America. Obviously, I'm going to do business with America. But on the margin, if I can find a customer that is Italy to Turkey, Italy to France, Italy to Dubai,
Right. So
that's
you,
a more
yeah.
anything. And so even if Trump doesn't do, I guess my point is that the risk of an economic slowdown in America, which is the strongest economy, most important economy, all the things that we know, are increasing every day, even if the president doesn't implement any of the policies that he's talking about, because the fact that the policies are constantly in discussion and that there's even a chance that they could be implemented is already incentivizing workaround thinking, which ultimately is a recipe for a weaker U.S. economy, and a weaker U.S. economy is a recipe for a global recession. That's the risk. Let me put it this way. A global recession was a non-factor. It was a factor a couple of years ago, and then it didn't happen. We all watched with the sort of this soft landing talk and all the things the bond market's done, et cetera. And now, because of not any particular events, but rather because of the rhetorical shift at the White House, you're now seeing evidence of the risk of a global recession.
How do you deal with the, I mean, I can tell you, that, talking to lots and lots of CEOs still, because I'm still on their books, even though I'm here at IG, they're trying all sorts of things to, from pushing manufacturing, trying to push it across borders, to trying to bulk up and buy materials early in the game and trying to stockpile them in warehouses. I get completely what you mean about, overall it means everything becomes more expensive and a weaker economy. But do you think it's going to be enough to actually cause that R word around the world?
No, I don't. I mean, I have no idea, and nobody knows. But what we all know is that it's even the fact that it's even a point. It wasn't a point of discussion 3 months ago.
Exactly.
It didn't exist. The bond market wouldn't look at the bond market 3 months ago, and look at the U.S. bond market today. Look at what the 10 years done. Look at what the 3-month notes are doing. Look at the bond market is saying that this is a real risk, and it wasn't a real risk a minute ago. Well, what has changed in the last 3 months? One thing. We all know what that one thing is. And it's not that it's been a policy change. It's a change in rhetoric that is then catalyzing a change in behavior in the private sector. And that is the thing that is creating that, combined with the fact that inflation in America continues to be peskier, which, to use a British diminutive characterization, but it continues to be peskier than anybody would want it to be. With that said, I am a big believer in the technology super glide. I do think the Nvidia earnings are meaningful. I do think that the one reason we may not have a recession, and the one thing that can overpower Trump's rhetoric or the bond market jitters, is explosive growth in technology. It's just not clear to me whether that explosive growth in the investment in technology is going to be something that can radiate into the broader economy, or is it actually just another giant pile of money for a very small group, which is exciting, but ultimately not the most beneficial or doesn't create the most robust or stable type of economic activity.
Right. And just whacking up the, we were talking about inverted yields there, whacking up the chart there and trying to zoom in there for you. Lots of our trader friends saying, welcome to the show, Ratigan, Dylan, Jugger saying,
you can call me Ratigan. They probably call me Ratigan. You can call me Ratigan.
Jugger is saying, must be 4 o'clock your time. Well, no, they're 1 hour. They think you're in Chicago.
They think I'm in New York.
Or New York.
Chicago.
That's right. He is in sunny Milan, people. So don't feel sorry.
Milan. Don't worry.
Don't feel sorry for him is what I'm saying here. Let's have a look at tech. I do hope you're right, because I do have Nvidia in my pension portfolio, the long-term pension, and also play this. But Nvidia had a really crazy ride yesterday. I was up watching and trading this along with our trader friends. It is really a very volatile. It's like that person that doesn't know whether to stay at the party or leave. I thought that they were overly hard done by, because they're I did say to Rich before the earnings came out, it does look like, it'll be good earnings, but then it'll be near-term volatility. And we did see that because investors are punishing it now. They're seeing this as, a normalization of the stock. And, Jensen Huang's, flowery words and, constant beat. Well, he's going to have to do better now because investors are wanting so much more. Where do you think Nvidia is going to go in the next few months towards the end of this year?
I mean, it's hard to see how it doesn't ultimately go. The only debate on Nvidia ever at this point, in my opinion, is valuation. Obviously, obviously there's demand. Obviously, it's an amazing product. Obviously, it's a central pillar of the foundation of phase one of the AI transition. All those things. I always marvel that a company that is this big can have that. It's one to have swings like a biotech startup when you're a company of this size is absolutely stunning.
It's like a train, right? That's going at 400 miles an hour. It's not going to just come to an abrupt halt like that, right? It's got so much momentum behind it.
Way.
Order book's still good. Order book's still full, and it had a pretty decent forecast as well in terms of its outlook for its margins, but clearly not good enough. It's we're coming up. We'll find out when the retail market hits in just over just under 9 minutes, really, when all session starts here. What are some of the other key tech stocks that you like?
Meta. I mean, I'm a big believer because I'm also a big believer in what I call phase two AI, and phase two AI is obviously all about the data to train all the robots to do whatever it is you want to do. And so I'm a big believer, owner, trader around Meta of all the names of all the Mag 7, even though I really, culturally, I really find Meta to be deeply offensive, but financially and just the product, in terms of the data product, I find to be the best positioned for the second layering here of the AI adoption. And so anytime, especially when you get a sell-off like we've had, anytime Meta gets kicked around a little bit, I start to nibble upon it.
Yeah. I'm also a player in Meta. I have a long on Meta, very, very bullish there on Meta, purely because the key term here for me is what it's doing in the data center side. Have you been asked for payment yet, where they just ask you to smile to the machine that takes your payment?
No, this is a Meta thing?
Yeah, well, it's going to be an all services thing. So, we've all been there. We've gone for, for a walk or for a run. You look very glamorous, by the way, in your yacht or boat picture on WhatsApp. But
listen, that's not a yacht. That's a gozzo. That's an Italian fishing boat.
Nice.
I'm not a yacht. I'm an Italian fishing. Don't be putting me on some yachts. Okay.
It looked very glamorous.
I'm an Italian fisherman.
More glamorous than my, ride back home in the London bus here. When are you coming to visit us?
I don't know. You're like, I'm telling you, listen, we'll sort this out another time.
You take me on your fishing boat, and I'll take you on the London bus.
And you can take me on the bus.
Yeah, it's a fair swap. But it's coming to your cinema soon, people. It's coming to your cinema soon. So I've tested this, and it's remarkable, and they're already testing it.
What is it?
So it's like a machine, or it can be a mobile phone app, and they look at your face. You've lost your wallet. You didn't bring your phones out of battery, but you've got maybe one of your devices on you. Maybe you got your Apple Watch on you, or something. So they're trialing the fact that you can pay by just smiling into, because
you're saying because I know that it's Angeline.
Yeah.
I confirm that Angeline is Angeline.
Exactly.
And now I can route from her face to her bank account.
And then she's with this dodgy person called Dylan Ratigan. So we can triangulate. We know that she is Angeline because they worked together before Bloomberg.
Oh, because so there's all this secondary. Okay.
Exactly. Back to that. Meta, which I completely agree with you, will need all this data, right? It's going to be able to sell data centers and places. We're going to need a lot of storage essentially. Right. So we got 30 seconds to go.
It offends me deeply, but it's profitable.
It is profitable. Me too. I've got 30 seconds to go. What is the rest of your day looking like, Dylan?
I mean, you got to. The other thing, when away from all the tech things, is I do think the global recession fear is a real thing, and I do think a short oil position, even though I know oil has been coming off already, but I do think that oil is the loser, and it will continue to. I think oil is a good proxy for the global recession fears, and I've been trading it that way, meaning I think it's going down.
Totally.
More.
Yeah. Then it's already fallen. Pleasure having you on. I hope to get you on next week, and we got plenty of questions which I'll shoot to you on your email from our trader friends here. Have a great day and see you soon, Dylan.
Okay.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG. Hey there, welcome back to All Sessions Opening Bell with myself and Ben Hoff. Thank you so much for joining us.
Good morning, Angeline. How are we?
I'm good. I'm a bit tired, I have to say. A bit tired after being up last night. I was messaging Rich just before the Nvidia going 2 hours ago, having fish and chips.
Oh, very nice.
And a gallon of ketchup, because you need to feed the... Right, to stay up, right?
Oh, right. So you think,
I
suppose ketchup's full of sugar, so yeah, that's probably a good idea.
Yeah, and oil and all that good stuff.
Yeah.
But yeah, it was volatile. And this, trader friends, is what we say over and over again. You hear me saying here, probably bore you to death. But when it comes to Nvidia's earnings, don't trade it in that first instance when it comes out, right? Let it settle. It had that crazy It's like head fake that we keep seeing over and over again every time it has the earnings. That's
it's I think one of those you just got to let it settle a little bit, because it's just moving so quickly at that moment in time that
show the 10-minute.
you're not really getting a true reflection of what's coming from the conference call, and actually often their numbers have always beaten, so it's then actually delving in a little bit more into some of the finer detail that you're probably not going to get from the headline number necessarily, because they were always beating. So I think, the Blackwell chip piece yesterday obviously then led to a bit more positivity, but I think the main thing was actually just the implied move, 10% move, and we just didn't see it.
Yeah, we didn't see it at all.
So
I was even using Tom Walsonholm's ATR, right, to try and see whether I could gauge it. But it was so volatile. It just like what's also crazy is that usually we have the moves based on the margin. The margin was below estimates, but it had toddled higher. It almost seemed like the market didn't know which bit to trade on. I was disappointed by gaming.
Yeah, well, that was a big miss, wasn't it?
Yeah, that was a big miss, and networking revenues as well.
Yeah, but I think the main thing on the back of the DeepSeek.
All sessions now open. We've been so busy talking about this.
Flat in Nvidia.
Flat.
Typical as we're talking, great.
As we were saying there, mixed and really probably open, as I was saying, the market doesn't really know which way to trade this. As you can see here, it's still really changing there, but really overall flat as a pancake. Let's have a look at some of the others here. Ben, take us through some of the biggest movers.
Mara, big move there, 11.5%. Obviously, Snowflake as well. Intuitive Machines, nice move, 7%. Riot Blockchain. So we're seeing sort of a bit of a theme, the sort of crypto space and the space sector. Virgin Galactic up as well. We're seeing sort of a bounce in that area. Virgin Galactic up 2.8%. Riot Blockchain 4%. TerraWolf 4.3%. Don't know much about TerraWolf. Clean Spark, another one, 4%. So obviously bounced back in that crypto sector, which had been hit so heavily over the last sort of 24, 48 hours. So all of those seem to be having a day, Mara in particular. Reddit, interestingly, up 2.4%.
Lots of people here either hate or love Reddit, depending on...
How do you sit on that side of it?
I think it's a great business plan if you want free employees, right?
Okay, yeah.
Free employees. Have you seen the memes around Reddit?
That's kind of what it is, isn't it? It's like memes, basically.
Meme space,
but you don't use it like as a forum or anything.
No, but I know plenty of people who do.
Really?
Do you use Reddit?
Not really.
Yeah.
I mean, I stumble across it now and again just for, literally, if you're asking like AI questions or whatever, and then sometimes you'll get a response file like what Reddit would have done or said, or if you're asking Google and stuff, it'll come to Reddit. But literally, I'm not going to it and saying, what am I doing or discussing or that side of it.
Loads of people troll it and mine it for information. Like I've seen loads of people, undergoing some sort of search or trying to find some sort of, reason for rejoining or renewing their Netflix subscription. So they go, Reddit, tell me people who want to quit Netflix and blah, 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 why. So they're kind of trolling it for views.
Yeah.
We've all seen those people who press on the, Rich is one of them, by the way, he always does it next to me, talks into his mobile phone for searches and things. But our gallery, I know Caleb hates Reddit. Some of the other people here love it. Hims and hers, away with the numbers. If you're watching this, him and hers, still up 1.6%. Right, Ben, let's have a look at the losers.
IonQ, eBay, interestingly, 7%. Not sure. Salesforce, wow, they were down in the post-market after their results. They had a big miss. They've continued, down 5%. Moderna, obviously, on the back of that Trump news, potentially about the flu shots, reversing the Biden approval. So they've been hit. SMCI, obviously, very, very volatile the last 2 days. That's now down 4%. I think I was actually off yesterday, but I think it bounced back 20%, wasn't it?
Yeah,
after it had basically had it's then released its earnings. So SMCI again volatile. Beyond Meat down 3.37%.
Yeah, Beyond Meat is one of those that is just basically, if you want to short, looking for something to short out there, let's give you the daily chart there.
Yeah.
Look at this chart. It just keeps on hurting here. And did you hear that Beyond Meat is, many other outfits, its competitors are looking to reverse the whole Beyond Meat to maybe some meat.
Ah, really?
Ah.
Yeah, I mean, that's probably not going to hit their business model too well.
They found that they plateaued, so they had high growth.
Yeah.
And then
I remember when it floated and it flew. That was in that period when any IPO was just smashing valuations and going.
Yeah.
And yeah.
And it was the darling. It was seen as the next best thing.
Yeah, yeah.
Did you listen to all the presses? Well, they used to like wear these T-shirts that were kind of like cool and slightly tight.
You don't like a tight-fitting T-shirt?
On a man, like a man fitting great, but tight, a bit too tight. Even my top is a bit loose here because I like eating. And I do like a pint, people. I do like a pint. My only reason for still staying in my birth country is keep pubs alive. But Beyond Meat then really slid, right?
Yeah, and it's, as we've seen, it's never really been...
And it got to the point where it had to internally, I believe, admit that basically they have hit the ceiling of people who are wanting to buy the products, and then now they need to reach out to those that may be Vegan Friday.
Yeah. I mean, unfortunately, it is what it is, isn't it? It is like that. Like their growth is difficult to be able to like
sustain.
Identify other areas, like we've said, like the product they're providing. They've got to either diversify into other products that are still vegan or non-meat, whatever it may be. But like, it's not an easy sort of market to get at.
Hold that thought. We're going to go to a short break, very, very short, and stay with us, trader friends, because we're going to be coming back with Ben on Live from the Trade Desk. Very short. Now we're back.
Oh, wow, we're back.
Yeah, this is a very short break, and I mentioned earlier, we talked about eBay as well. Ben, eBay quarterly sales well below expectations, weak demand being seen there. So no surprises. Shares down more than 7% on all sessions. Let's have a look at the minute chart just to give you a better idea. Ooh, maybe not the minute, but let's take a look at the 3 minutes. There we are. Why is that chart? There we are. eBay. Do you use eBay?
Not consistently.
That is the problem there.
Yeah.
Right?
So,
trader friends, do you guys use eBay? Because this is the issue. Everyone jumped on the bandwagon and thought, oh, great, let's like sell all this stuff or let's like buy this stuff. And then it kind of then petered off and then everyone realized, whoa, it's actually quite a faff.
Well, A, it's a faff, and B, they actually were quite expensive. If you're a seller, they take a reasonable percentage. I think it's sort of like 12, 13% on certain items. So I had a watch that I sold that I basically won. I was like, I don't need it, so I sold it. But I was quite surprised at the cut they took. So I think a lot of people are put off a little bit by their costs associated with it, and there are a lot of other avenues now. I think historically, obviously, eBay was your go-to, but your Facebook Marketplace, those sorts of places now, there is ease and accessibility, so there's a lot more competition in that market that wasn't there. And like you say, unless you are a constant eBay like seller or buyer, which they probably have, it's now where do you find the next crop of users as such, and Facebook Marketplace growth and that sort of side of things, I do think is basically going to eat into that market share, and they're not doing anything differently. And unless they do look at their costings, which I think they may have actually done, I think they are looking to potentially reduce those to try and re-attract or engage with users.
I have to admit, I did use eBay to flog stuff during the lockdown, purely because like you couldn't go anywhere, you couldn't leave, so you might as well just kind of
do something.
Yeah, do something.
Declutter your house.
Exactly.
Free up some space. Mrs. Hoff, if you're listening, you can do that as well.
Mrs. Hoff, I've got him on camera saying that.
She's very good. She used Vinted. So,
yes.
Yeah, but it's just, but basically like babies' clothes and stuff like that, she just rolls them back round on there because it's that sort of environment. But that again is like something like that is what people would have gone to eBay and.
Exactly, fantastic. I'm hearing good things about vintage, for vintage clothing as well.
Well, I'm not a user, but she is. But she uses a lot. Yeah, I think it is good. And you can get a lot of new stuff as well. Like people just decided they don't want it, but they don't go back to store or whatever. There's a lot of like items that are still tagged with their tags all new, that sort of stuff. So yeah.
Yeah, which makes sense, right? Because during that baby growth stage, well, you know, you've got young children. Like before you even get them into it, they've grown out of it.
Yeah, exactly. Yeah.
So they also have this challenging environment because of the uncertainty around tariffs as well. Because let's not forget, you know, the de minimis changes that are taking place. You heard about all that malarkey going on. So the likes of Shein and the likes of, they could evade some of the tariffs by, I think each amount coming in, as long as it's like below $800, it's like a de minimis, like minimum amount. They could evade that. But now it looks like Trump's changing all that. So they're going to be captured by...
He won't like loopholes, will he, Donald?
No loopholes.
Yeah. Oh, so is that like per item? So if it's like a lower priced item, you wouldn't pay the tariff on it?
Exactly. So every online marketplace will get caught by this, right? Your Amazons, right? Because if you're selling stuff and there's this import-export, and you no longer do you have this de minimis loophole that you can bank on. Let's have a look at Tesla. Tesla's another one that you look at. Do you like?
It was holding up this morning. Do I like it? I'm not a huge fan, but not to say it's such a popular stock. But yeah, I mean, it's been battered the last 2 or 3 days.
It has.
Absolutely battered.
And it's really pretty much, you know, let's not, you know, let's not, you know, be quite. But since December, and really since the inauguration, it's just gone, hasn't it?
Yeah, I mean, I had an article this morning, and basically a lot of it they're putting down to is so much of its valuation and value was Elon.
Yeah.
And Musk, and him stepping into his role with Doge and all of that has basically meant his commitment and time to Tesla has been less, and it feels like a lot of the believers or it feels like it's almost like a cult Tesla as well. Like people are invested in the company and him as much as they are actually just the valuation of the stock and what it is. So. Obviously that has had an effect, and we've seen that over the last couple of days with the real strong moves lower. I mean, we've dropped sort of $25-30 in no time.
Yeah, it's crazy. And I would also say that this slight bounce back that we're seeing in all sessions, Trader Friends, and is probably, you know, just a bit of a retracement, because boy, did we have a painful previous session, down 3.6.
That's what I mean. I'm just not sure it could continue in the same vein. To basically, if it had gone again, it's like, well, what's going to keep it holding? So you would hope there would be some buyers or some resistance in there to give it some support. Maybe it is an opportunity. Maybe Elon will start to reevaluate his time and how he allocates his time, and purely just to get a bit more belief back in to Tesla.
My humble view is that it's got 2 things working against the stock at the moment. One, other than the premise that a lot of it was baked in when Musk became Trump's BFF. One is that we are now seeing the real, you know, impact of sales falling. Don't forget, Trader Friends, last year we had Musk even admitting to sacrificing margins for sales, right? I've got tons of friends in Asia that will swear they will never buy a Tesla ever again.
Well, yeah,
they ordered it brand new. What happens when you buy a Tesla is they immediately, it's quite cool actually, you become a part of a club, you get a number, and you get assigned a number, and you can almost follow it through the manufacturing process, right? It's, you've got your, you know, doors fitted now. Oh, that extra pack. Ben looks like the person that buys the premium extra packs here.
Premium client manager,
obviously.
Premium finishing, yeah.
Yeah. The platinum, finish has been added on.
Platinum finish.
Yeah, platinum finish.
Not quite sure I'm ready for that.
Your special. Everything I found with a Tesla, whenever I asked, because I have driven is an extra 1,000, right?
Oh, it's just 1,000.
Yeah.
It's like building work. It's just 1,000. Yeah.
It has that sound beforehand. So everything which is an extra is like 1,000. So if you want like not the basic seats, but you want to upgrade slightly, it's going to be 1,000. I want driver assist. I want
a lot more than 1,000.
Heads-up display, which I didn't get, by the way, because I wasn't willing to pay the heads-up.
You're a Tesla driver, right? Are you?
No, I was looking at it, but in the end, the gull wings got me. So the Model X.
I've been in it.
I drove that,
yeah.
and what killed it for me was I have a lot of stuff. Not mine. I just have my family has a lot of stuff.
They are big cars, though.
They're big, but you can't put a roof rack or surfboards or anything on because of that thing. So they went and said, "Oh, but and for that thing came out again, right? You can have this Tesla hitch wagon thing at the back, which you clip onto the back because."
Right, so that's their version, yeah.
Yeah, but like
a roof rack, but it doesn't work.
No, it doesn't work. You can't get I've got a very.
Well, I've not really seen many Teslas with the roof racks on, to be fair. Most people who are putting roof racks on their car are driving like Volvos or. Yeah.
So and the extra. Oh, you want the smart charge? That'd be another.
Yeah.
Right.
Yeah.
So Tesla, it's those things, and also the second thing is the two big egos in the White House. That to me, like at some point, you can't have two big egos.
Oh yeah. That that's yes.
Spectacularly.
Yes, it's a bit like
a ticking time bomb.
Yeah, I mean,
Dinner at my place?
I just wouldn't want to be too reliant on Donald to be my best mate forever, basically.
Oh.
It'd be nice if he was my friend for a little while, but not forever.
Right, let's have a look. Not forever. I hope you count me in the ranks of your friends. Let's go to some of the other all-session stocks here because we are having quite a few movers now. IonQ, some of the names that we're seeing here, miners as well amongst the losers list. Taiwan Semiconductor down 8%. I noticed that it was fluctuating yesterday quite a bit before those Nvidia results. Dell, you like Dell?
No, I don't like Dell necessarily.
You watch Dell?
No,
like
Dell are reporting tonight post-market. So one to watch, basically. They've got an implied vol move of about 9.7%, just shy of 10% move. So we might see some decent action in that. They've actually had a decent start to the year. They're up over 25%. So in the past year, sorry. But yeah, I'm a lot of focus on their margins and sort of financing their margins, basically. So we'll see how they come out.
Let's take a look at client sentiment there. Take us through the client sentiment then.
86% long positions, and we've seen basically, 50-50 buys and sells in the recent days and weeks. So yeah, still overall bullish. If we have a quick look, if you just bring up the tip ranks, we'll just see where we're at with that at the moment as well. So yeah, smart score neutral, but still analyst consensus is to be long. Like I said, it has outperformed the S&P in the last year by about 7%. So whether that continues or not, or whether I think it's very much just going to be earnings driven.
Yeah.
If they've hit their forecasts, they'll probably continue. But if they don't, then we might see actually quite a lot of weakness on the back of some relative strength over the last year.
Yeah, its return on equity is just under 5, but what's 4.94 million there to be exact. Very low divi yield there for a company like Dell, 1.5% relatively.
Yeah, I mean, I imagine they're trying to compete in AI and they're going to have to spend, and I guess
a ton more.
Exactly. So divvies, unfortunately, will probably be something that's probably held back
for a while,
just because they need the cash within the company.
Yeah.
So yeah, just they're reporting tonight post hours, so there'll be something in that.
What's also interesting as well is that, we have this almost like a bifurcation now, don't we? I feel like we've got tech, but there's a bifurcation to those that are fast enough in the AI space. And then we've got this like kind of like not so fast, but still in the hardware space, which is kind of where Dell sits, right?
Yeah, I think it's basically it's almost like the Mag 7, isn't it, really, in terms of they were more pioneering and they're newer, probably slightly more agile or more focused on the AI space than your Dells or I don't know who else would be there. But basically the hardware companies that are trying to compete and move. I guess it's a bit like trying to turn a truck quickly. It's not going to happen quickly. It takes longer.
Yeah. And once it does start turning, you're kind of either too late or it's swung.
A little bit like that.
Yeah.
So I think it's not like the sexy stock, is it? That's kind of just the way it sits. But it's still marked well recently. So there is still good performance in it. So it's probably just more of a diversification play. Looking at that sector, it's probably a little bit more of a stable stock rather than the Nvidias of this world recently. So, yeah.
We've got 30 seconds to go, but just a quick call out to those who have chimed in, saying thanks so much for bringing up eBay. eBay, according to Michael Anthony, could fall back to 64. Michael's saying that he looks for companies that insiders and funds are buying and not selling, and also buying HLF with a PE of 3.32 with all of this. What's also interesting, Arthur Fox Haig, thanks so much for commenting as well. eBay swamped with Chinese sellers, hundreds of identical listings of the same thing. Wow, if you think eBay is crazy with that, with the same things, try Alibaba. I was an early tester of Alibaba. That's even more swamped, right? Trader groups also complain of eBay always siding with the buyer in a dispute. I agree with that, even when it's an obvious scammer, right? We have to go. But Jugger saying to your comment about not best friend forever. You are so superficial. Thanks so much, Jugger. But we'll be right back. Thank you so much, Ben.
Yeah, thank you for having me again.
Looking to having you back and looking at eBay again, and of course Dell after those earnings.
We'll see. Thank you.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
So welcome to our options beginners class. That's right, today we're taking a little bit of a break from the real tough stuff, right? We're making it easy. Today we're going to be talking about the bid-ask spread and liquidity. So this also is relevant for share trading as well, spread betting, CFD, or options market. So beginners options, welcome to class number 7, the bid-ask spread and liquidity. So we're going to talk about, as I said, the spread and liquidity, because liquidity represents the ease of converting assets to cash without affecting the market price. Okay, and it's vital for efficient and fair order execution and trading. Now, you might say, look, I'm only trading at £10 a point or £1 a point, right? The stock market's huge. It's not going to affect what I affect isn't going to affect what the price or what's going on. It's not so much about that. It's for getting done within the spread, right? And on Tasty, that is one of the best things about the platform is a little bit trading FX on Revolut when you go on holiday, right? You're not having to pay those huge spreads. You get done in the middle or potentially done in the middle. The caveat for options traders is that a liquid stock or ETF doesn't guarantee a similarly liquid options market. You must make sure the options you're eyeing are liquid enough to trade. This is the problem with the UK and European markets, right? They're not quite as liquid as the US. The US is incredible. One of the core aspects of a liquid market is a tight bid-ask spread. If the price discrepancy between the highest willing buyer and the lowest willing seller, right, that effectively represents the slippage between where we buy and sell our positions. By focusing on the most liquid, actively traded stocks, we're able to minimize this cost significantly, right? So we put the bid-ask spread on a SPY at the money put for 23 days to expiry, that's March. And you can see it's 954 to 957. That is a tiny spread in terms of trading the S&P. Now, the great news is Elliot Harris has been working so hard to get the IG platform spreads to come in as well. So he's been working on this for weeks and weeks and months, and he's actually got the SPY 500 options to become much, much tighter, saving you money. And it's all about giving the clients better prices and better trades. Now, when it comes to activity and information, right, more activity means tighter spreads, better for you. Less activity, worse for you. The stock price, the lower the price, the tighter spreads, right? So if a stock's trading at $50, then it's a tight spread. If it's trading at $500, then obviously it's going to be slightly wider. For the most part, the retail trader buys at the ask, right? Buys on the offer for the higher price and sells at the bid. right? So the retail trader, that's most of you guys, you're buying up here and you're selling down here. The market gets the bit in the middle, the market gets the spread. That's basically the cost of retail trading. We could have the perfect theoretical strategy, but if we don't get filled at a good price, then you're leaving money on the table. This means that to keep more money in our pocket, in our P&Ls, we want to trade underlyings with a low bid-ask spread. But how low can these spreads go? Well, if we analyze 5 known highly liquid underlyings, we can conclude that an underlying is liquid if the spread is around 1 to 1.5% of the options mid-price. Okay, so 1% on the spread. And we've looked at Spiders, Apple, IWN, Russell 2000, and GLG, and Amazon. You can see there the average 1.4 with the 2 indices, because of course indices are hugely liquid, only being 0.3 and 0.6. So obviously individual stocks tend to have slightly wider spreads than ETFs. But by first entering the trade at mid-price, all right, the great thing about the tasty, I mean, I didn't even get this in working in institutions and hedge funds, right? Getting that mid-price is one of the really, really great things about the system. Now, when it comes to debit trades, right, debit as in you are paying, there is a debit coming out of your account. You're buying an option or spread, hoping it rises in value to sell at a profit. The natural price is the ask, right? That's the first known seller that is shouting out loud on the order book, right? That is the natural price, representing the worst price for you, because that's where you can buy it, the absolute. If you're super aggressive and a takeover bid's just come out, right, you don't care about trading in the middle. You think it's going to go up 10, 15%. You grab that stock that's available right there. And it happens. It's happened to me back in the day before all the machines. A bid hits the screen and you just go in at market to buy as much as possible. Those, you know, were the most exciting times on the trading floor. But that's still the natural price. The vast majority, 99% of the time, you'd rather come inside a better price. Ideally, the ask should be near the bid to minimize losses if exiting immediately, right? So that's the way I do it. Sometimes in Revolut, I actually change money to dollars and then back to pounds straight away, like, you know, £5, and see how much it's cost me when I'm demonstrating how good it is to my sister going on holiday or something like that, who is, you know, big shout out, she'll be watching this, go off on holiday soon. For instance, with a 5-cent spread, buying at 145 and selling at 140, you're resulting in a 5 cents loss straight away. However, working orders around the mid price of 142, 143, you might be able to buy at 143 and sell at 143, and it doesn't cost you anything but the cost of the contract. Now, credit trades, the other way around, right? We like it. When you're receiving money, you're selling a put or selling put spreads. You receive a credit. You're collecting the cash, hoping it decreases in value to buy back at a lower price for profit. The natural price is the bid. The worst possible price is that bid, but the best for the market maker. Boo. Closer to this price increases fill chances. Ideally, the bid should be near the ask to minimize losses. And again, if it's a 3-cent spread, right, you would instantly lose 3 cents a share. But you work in the middle, 315, 316, and this is the great thing. I wish I could show you it on the platform, but the market's not open. So I can't do that right now, but have a go, get your tasty platform up and, you know, trade in something small and just put it into the middle, as Sosnoff and I did on our tour around the country. That's going to be happening again in June. He is coming to London, so I'll update you on getting tickets for that soon. But you put it in the middle and you be patient. And last night I was trying to put something on in Nvidia, about 8:30 just to have a little go. And I put it in and I went and finished making my dinner and I just heard the ding, ding, ding in the background, and that was me getting filled about 3 minutes later, right in the middle. So what are the takeaways? And it wasn't a takeaway I was cooking, it was a proper pasta dish. It was beautiful. Bid-ask spread is the difference between the price to sell or buy shares of stocks and options. The minimum bid-ask spread is, of course, 1 cent. The goal is to trade as close to this as possible. A narrow bid-ask spread usually means fairer pricing and easier navigation getting in and out. Right? I feel like I'm saving money every single time on Tasty when I get done in the middle. Sometimes I even put it on the other side, the more beneficial side, and I get done on there. But that's in a really liquid market. A wide bid-ask spreads indicate an illiquid marketplace where the fair price is unclear and it might be hard to get in and out of trades. Right, that's it for today's lesson. And that is also me done for the day. So Angeline will be back with you in 2-minute break. We'll see you then.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Welcome back, Trader friends. Everyone's clapping. You have to bow, bow. I am looking a bit somber and not my usual self because it is the last and final segment in the series.
Am I looking happy about that? I don't know.
I don't know. Are you happy?
It's a bittersweet, actually.
Ah.
It's started off terrifying, and I'm almost now starting to enjoy the fear and the
I think
joy.
when he first saw me, he ran in the opposite direction of the floor. You know, we've what is that song? We've come a long, long way together.
You can sing on live TV.
You know what I do? Speaking of live, I'll stay with the singing. He will take us through some of the top of the pops that we've covered. There's so many. But let's start off with what we began with, which was the process and how we got there.
Yeah, I was thinking about this earlier today, and I was just like, you can almost encapsulate trading and what we're trying to do here in one sentence, which is, in my mind, you have one job. Find good risk-reward opportunities that match your entry criteria and pull the trigger. That is it. Now, inside that sentence, there's an awful lot of stuff, but risk-reward, what is an entry criteria, how psychologically can you pull the trigger? But that's what we're trying to do here. So remember back from episode 1, I think it was, there's no right and wrong trade. This is just a probability game. Turn your whole life into probabilities. There's nothing really right and wrong. It's just probabilities. So think in probabilities, embrace it. That protects your ego. How do you think in probabilities? Do a journal. I know lots of people out there think it's really boring.
I have a journal.
But it's so good. And even if you I'm not even saying do a journal in real time. Do it at the end of the day. Just log all the trades, log all the data. And I can't tell you how useful it is to be able to look back on it and filter it and say, and it really pins down, when I do a breakout trade at 130 on the Dow Jones and it moves 7 pips in the direction after it breaks, I know that there's a 90% chance it's going to get 10 pips. That information is crucial to giving you the confidence to think in probabilities and let the trade run. Journal's brilliant. Technicals, I mean, obviously I'm a short-term trader, so technicals are key, but don't overcomplicate it. Get 1 or 2. Learn them, understand which markets they work in, understand which markets they don't work in. Don't go indicator shopping, by which I mean, I think the market's going to go down. Let's find the indicator that supports my thesis.
Some people, it makes my eyes bleed when they first use indicators, first learn about it. They chuck everything on. It becomes almost like a sea of indicators, and you can't see the price action.
Yeah, that is definitely not the way to do it. But they are useful, but they are just a crutch. They're almost a psychological way to help you frame a situation and give you a reason to get in and out, and that you couple that with good, money management, and that's your strategy.
Yeah, and there's a saying, isn't there? Like, fundamentals show you how to trade it. Technicals show you how hard to hit it.
Oh, that's a good one. Yeah, I like it.
And love the journal too, because it's such a pleasure seeing your journal, because mine's written. And I like doing it at the end of the day as well, or after a trade and a kind of a few moment.
Yeah.
But I also like on the IG platform, as trader friends, you've heard me say many times, you can do this on a Tasty platform as well. They've got a journal itself. But I really like the function on the IG platform where you can write it into the chart itself that you are going to trade, so you know for the next time.
Yeah, perfect.
Yeah, you can find it with that handy text. It's on my chart here, just showing that to you again. Go to that pencil and go to text, and you can write it within here. Like you see me write support on this Tech 100 chart at around 21,000, 100-day moving average. So that reminds me when I come to trade it next, I know what I was last looking out for.
Wish I'd known that 8 years ago instead of trying to cut and paste and do paint shop and all that rubbish.
I did one last night, Nvidia, which was Future Ange, do not trade Nvidia the moment the earnings are out, because it does a head fake thing, it goes insane. Crazy, insane. Wait 10 minutes until it settles.
Yep, that is, I learned that the hard way, trading lots of live news events, non-farm payrolls, right?
Oh.
It's so exciting, and it's all over the place, but what happens 90% of the time, it ends up right back where it was half an hour ago. That is more about luck than skill, I think. I mean, if someone's cracked it, well done them, but I never did.
That's why I like the bounce.
Yeah, I much prefer to fade those moves than try and run them. But
yeah. So then we talked about capital preservation.
Yeah.
Which is key when you're starting off.
It's the way you stay in the game, and I think the most powerful one here, and it's sometimes the hardest to do because it's about how much spare money you have, but the percentage at risk of each trade. Keep that number tiny. I know a lot of people at IG talk about 2% of your account at risk per trade. I personally liked 1%. if you go and read something like Market Wizards, the big boy traders in that, right, they talk about 0.5%. 0.5% means you can have something like 140 losing trades in a row and you've still only lost half your account. You're going to get the message after 140 losing trades in a row that maybe you need to tweak something. So that's really powerful. That's almost like an automatic handbrake. As your account goes down, the amount you have to put at risk goes down because you're still doing a set percentage. So I really like that as a metric to really abide by. And it's hard because the market sometimes doesn't give you those opportunities. You know, it's about, we were talking about, was it last week, where you put your stop determines what's at risk, and sometimes the stop needs to be 90 pips away, and can your account afford that? If not, you should be having a smaller size. If you can't go any smaller, then sorry, don't do that risk, because if you're going to lose 5% of your account in a trade, every brilliant strategy out there can easily have 10, 15 losing trades in a row. That's just the way it is. If you can't survive that, or that's such a big psychological hit for you, the amount you have at loss really should almost make it boring. If the amount that you're so indifferent to losing that amount, then you will trade really well, because you'll just look at the actual technical picture, the fundamental picture. You won't have your chimp rabbiting away saying, it's scary, get out. You'll just be thinking of it as a process and not as a numbers game. So try and make that amount of risk as small as you possibly can by trading small.
What's also interesting is that, understanding the amount that you're going to risk. I've seen many versions of this. Some people even have an Excel spreadsheet, because most people forget that if they've lost money, they need the pot's changed.
Yeah,
right?
yeah.
And you might need to, if it's an extremely volatile stock that you're trading or a financial instrument you're trading, you also then need to re-engage your chimp to change your position size accordingly.
Yeah, yeah, right, yeah. When people think, oh, that's gone down 50%, I need to have a trade that goes up 50%. No, you need a trade that goes up 100% to get back to break even. So you have to reframe it like that. And actually that's quite a good point I've just remembered. When you're in a big hole like that and it's gone down, don't try and make that money back. Reframe because you've lost a lot of money. You're in a hole. You're in fight or flight. You're not thinking.
You're tilted, as Issar was saying.
Yeah, exactly. You're not in the right frame of mind. So to get out of that fight or flight response, you have to change the situation into I don't know why it works. Again, a psychology thing. Put that into a challenge and to try and solve, rather than a scary thing to be in. And when you switch your mindset to challenge, for some reason, it dampens down fight or flight. And how do you do a challenge? You set yourself an achievable goal. So if you've lost a load of money,
Such a pleasure to see you because, I love Scandinavia. I've worked in Finland and Sweden before, and it's such a great perspective to have you on because, let's be fair, we talk enough about Europe and, mainland and the US here. So it's good to have you on.
It's great to be with you. Thanks for having me.
Yeah. So the big thing this week, I guess, the whole, U.S. consumer sentiment shift alongside we're seeing, markets are taking in some of the big name earnings like Nvidia, which is still shaking out on the retail side as we speak. And also this inverted yield curve persisting. Which of those do you want to start off with and has been dominating your week so far?
Yes, they're all interesting, and we could start with the most interesting one, which is the American Associate for Individual Investors survey on sentiment on their members. So they have done a survey since 1987 on investor sentiment. So they are basically asking, are you bullish or bearish or neutral for the next 6 months? And we have had some quite high readings. I think it was like just a month ago, we got the yearly high at 47% saying they're bearish. But this week, actually yesterday, we got the highest reading for 60.6% of the investors saying they are bearish on the next 6 months. And we've only had a higher reading for since 1987 4 times. And that was in 1990, 2008, 2009, and 22. So it's not that often that we see this kind of sentiment with investors.
Let's put up the chart here for our viewers there to show them what Patrick's talking about. Are we seeing then, in particular, any data, hard data that shows that this will continue to persist in the weeks and months ahead?
Yeah, so I mean, what's interesting with this is it's just a sentiment, it's just a feel of what individual investors are doing. And we're not seeing yesterday's numbers on this chart, but yesterday's numbers were 60.6, which is record high. And it's basically telling me that retail investors are standing on the sidelines, probably building some cash and trying to navigate through some uncertain periods. But the interesting thing is to see, well, I just did a quick overview of these 4 periods. And in 1990, the stock market, the S&P 500, actually returned 22.8% just after that reading. In 2008, it was minus 6%, but in 2009, it was 49.8% a return over the next 6 months. And in 2022, it was 10.5. So in general, we have a strong market in the next 6 months when the investors are this bearish as they are now.
And I guess what's also interesting is that we are now seeing quite a big move, if you like, of this playing out in terms of rotation. We're seeing the DAX and the FTSE, for example, just whacking that up for you, really having their day, right? I mean, these are like, the FTSE's been on a huge run.
The European stock markets has outperformed American stock markets. So if you can take the CAC 40, the DAX, the FTSE, even the smaller Swedish OMX 30, which is highly dependent on financials and industrials, have outperformed. So it's been a rotation, as you say, from growth to value, from markets as US are tended to have more growth stock to markets with lower multiples, such as Europe. I have some memory of the P ratios for the US market. I think it's around 26. And if I'm not off totally, I think Europe as a whole is around 16. So it's a big difference in the multiples on earnings. And you can actually basically buy companies for more company for less amount in Europe.
That's a really cool way of summarizing that. Also, we're seeing on the US front itself as well, even in the US, there's this rotation between big caps to small caps, right? Let's just check out the Russell here. let's see. So this is the Russell, which I'm adding to the workspace there, and this is the daily chart. And as you can see here, just showing you briefly, we did see a brief rise there, but it's kind of petered off right now. But interesting to also look at the multiples there, because there has been a move which has meant that the small company focused Russell 2000 rose 11.5% over 5 days. And this was around July 18th, 2024. So one could argue that much of this rotation in the US was already happening from the big caps to the smaller caps a lot earlier on. But certainly in Europe, we're seeing that, so far this year strongly. Yet again, I guess the question is, with the terror tantrum in place, with a lot of uncertainty out there, 2 wars still going on, but Trump says he's trying to fix that. Are we going to continue seeing this continue as we march towards summer?
Well, I think so. There's a lot of uncertainty, especially with Trump and Doge just going out with new tariffs and new things all the day. You don't really know what's happening going forward. So it's big uncertainty. But what I like at this moment, what makes me less worried, is if I can just show you a chart here.
Guys in the gallery, can we get his chart up?
Yeah, so if you can see it, just let me know when you see it.
Okay, whilst he's working to get that up, I will just give you an update of some of the things that have happened recently. Trump directing agencies to review and terminate unnecessary contracts. That's still ongoing. Here we are. Patrick's chart is up.
So this is S&P 500 stocks this year to date, and we clearly see the rotation here from mega caps to other sectors. So you have financials, JP Morgan, as you see, 8% up, but also healthcare, Eli Lilly, 18.5. You also have consumer defensive up in top right corner, with more Walmart, Costco stocks similar that have performed really good. So as you can see just on the color scheme, that it's really those big mega caps trading in red, and you can see the breadth in the market that all the other sectors actually performing quite good this year. So that takes away some of the risk uncertainty. For me, it's a broader rotation, not just a sell-off.
Cool. And speaking of sell-off, Tesla has had quite a bit of a sell-off recently. It has jumped up today, but it looks a bit more like a retracement going on there. It's currently still at that 29472 handle, but Tesla's seen a lot of headwinds. It almost seems like we had the inauguration and all that pumped up enthusiasm, and the rise behind that stock has come off now. Is this one that is key, and what are your views? Are you bullish? Are you bearish, Patrick? And also, what I want to point out too is that we had a huge drop in the previous sessions. The last one being due to data showing that EV sales in Europe falling quite dramatically, especially, and that hit Tesla. Scandinavia's always been far ahead of everyone else in the EV space. What's happening on that front over your side?
Yes, definitely. So in Norway, they actually put in place some incentives a couple of years ago to buy EVs, and we have seen that majority of new cars are actually EV cars in Norway. But the picture is slightly different in Sweden. And for Tesla, they have had some headwind with the unions. So in Sweden, we have some strong unions, and it's normal that if you are a large company, you actually sign a deal with them, and you have that deal, and you negotiate every year for salaries and everything with union. But Tesla has they want to go without a trade deal, and they want to negotiate individually. So what the unions have been doing for some time now is actually just protest and interrupting and trying to disrupt Tesla in Sweden. So they have had some hard times here, but also it reflects on consumers. I see in my feeds a lot of people actually trying to go away from Tesla just because they don't want to support a company who is led by Musk.
Interesting. And you think it's actually, affected consumers that much to the point where they're put off by buying Teslas?
Yeah.
Wow.
Definitely. Yeah. I can see that almost every day.
Wow. Fascinating. Given the fact that, Scandinavia's always, even back in the early 2000s when I was working in Finland, one never had to wait in the cold in -20 because quite literally in the Lassi Palazzi, whilst you're waiting for your train, everyone would get a text message to say that this train is coming on that platform. So no one's even waiting outside. Cars were very much hybrid and on, to EV much quicker than in Europe. And it's interesting to see that politics is now playing out in what people buy over there.
But I mean, Swedes are still buying the new things out there. We just diverge to other brands. So in Sweden, we are buying a lot of Chinese manufacturing, the Chinese cars. So I mean, it's not that we're going back to the old cars with sticks and
which leads me to my
engines.
next question. Are there a lot of BYDs over there, and the smaller Chinese makes as well?
I don't see that many. I don't know the exact number, but I mean, just looking out the street, I don't see in the total that many, but they are growing. So if I just look back a year ago, I didn't see them at all, but now I can actually see one or two here and there. So you're seeing more of them, but in aggregate, they're not a large number.
Interesting. And this is even more fascinating because it really comes at a time when we could see these tariffs really play out in a very mixed way. It's all still shaking out. Every day I feel like you're waking up to some new tariff speech from Trump. The latest being that there's going to be another month-long pause on the new tariffs on imports from Mexico and Canada, right? So now it's been pushed back even more to April the 2nd. And then now, this 25% reciprocal tariff on European cars and other goods. What do you make of that? And in your mind, and with your analyst hat on, does this mean like we should be looking at shorting companies like European automakers, like the German ones, for example, that might be hit by these 25% tariffs? Or do you think we're back in rollback territory again?
Sure, a good question. I mean, I as an analyst like to look at the numbers, the fundamentals, especially looking into what companies I would like to buy. So we have talked, you and I have talked a lot about Trump and his tariffs and going back and forth about like, is he actually going to implement these? Will he actually hurt the U.S. consumer, or is he doing this to leverage his deals with his major partners? I think it's noise until we can actually see this in the numbers. But I think we can do, and where it shows up today is in sentiment and investor sentiment, consumer sentiments, and that could actually impact the fundamentals within the companies that you want to buy. So for today, I don't see myself buying or selling any company in Europe or outside based on threats from Trump on tariffs, because I like to see where it's going. And as you just said, he's rolling back now a bit on when to implement them on Canada and Mexico. And I think he will do that back and forth. especially with Europe, but also with China.
Yeah.
I'm more worried where you can see sentiment in inflation expectations, but also growth expectations, and that could definitely have an impact on stocks.
So buy the fact, not the confusion. Is basically
something like that. But I mean, as we see, it puts sort of a blanket over the markets. It's a lot of uncertainty. Investors are piling up in the longer durations of treasury bonds. We see that in 2-year, 3-year, up to 10-year, which has been just trading at lower yields ever since, and they just keep doing that. So you could interpret that just going to safety, going away from just the riskier stock market. Could be one implication.
Let's take a look at some of the currencies then that have benefited or risen against the dollar since the Trump 2024 election win, and some of those in terms of percentages that have not done as well. No surprises, the ruble at the top of the list there. The yen also up percentage change, up 3.7%. That's to the 26th of February this year. Let's clarify that. This data is from LSEG data stream. But on the losers list, some of the biggest, the South African rand, also not surprising there, the Turkish lira, and the Argentine peso. Some of the other key spaces that we've been talking about, Patrick, the inverted yield curve, you were talking about that earlier on. Is this, we're going to see more of this continue as we head towards the summer? No one seems to be talking about concerns about the US debt pile anymore. It seems to be kind of like been kicked in the back burner. Maybe that's Trump's plan. Create so much confusion, no one actually knows to look for the real problems emerging.
I mean, you could definitely look at the total debt, and it's a problem. I mean, that's a big can that you're kicking down the road that eventually will create a lot of problems for markets, for the economies. But the thing is with stock markets, that's, you don't look that far away. It's probably 8 to 10 years something before we see real problems with just the aggregate of the debt. But if you look at the yield curve now, I think investors are looking into buying the longer durations because they see that it is a lower risk. It's a way to get in less effect for lower yields going forward. And that's what I see. I think the yield curve will stay inverted because the longer durations are declining faster than short ones. But I actually see that a year from now we will probably have more rate cuts from the Fed than projected now. So it's a play that the whole yield curve with the whole of the yield curve will actually come down a bit.
I'm just going to whack up the 10-year Treasury constant maturity minus the 2-year Treasury constant maturity. If you want to just come off quickly, otherwise you'll see a glitch on my chart there. There we go. Yeah, it's really interesting. It's almost like the market has become unhinged. This, trader friends, is from the Federal Reserve Bank of St. Louis, it's one that many fund managers watch. There's a really handy button up here that will give you the ability to toggle between the frequency as well. What kind of sites do you use when you do your research, Patrick?
I mean, Fred, as you're displaying now, it's definitely one of them. I like to use Macro Micro, which is a good site for these kind of charts.
Macro Micro, I've not heard of that one.
Yeah.
Oh, interesting.
It's good place to get charts for various. If you just you could also search in the search bar up to the right and just have like a US yield or anything like that. You get a lot of interesting charts here.
It must know that it's trying to sell me stuff. Here we are. Nice.
And there you have also a lot of suggestions from the site, where you can just toggle on different charts. So this is definitely something if you're into macro and want to have a good view of what's happening.
Nice. It even has the nicely drawn already, the US-Germany 10-year yield spread. Brilliant.
Yeah, and you can actually, if you press the DIY button, you can actually add different curves within the same chart.
Nice.
So you could, if it's possible, I mean, you can't compare things that are not comparable, but if you want to compare yields, for example, you could do that.
Nice. Is it just for macro charts, or can you also use it for stocks? And one of the functions I really missed that I don't seem to have, trader friends, maybe you can tell me whether I've missed it, but on the IG platform, I quite like rebasing charts, but I'm still unable, or at least I haven't found the button to rebase. For example, if I wanted to compare EasyJet, IAG and Ryanair and rebase it, I haven't found an easy way in the IG platform.
No, I like using TradingView to compare stock charts. There you can add multiple stocks within one chart, and also add certain indicators to that chart. So definitely look into TradingView. I'm not sure if you rebase it, but it shows in percentage if you compare it. So if you, for example, look into the Mag 7 for this year, you could see the percentage performance and compare them.
Right, we don't have much time to go. We've got 2 more minutes. Just checking in on the markets there with Patrick, looking like a pretty up day for the US names there. US Tech 100, Wall Street up slightly. Germany 40 though is down, but to be honest, the Germany 40 can have a rest because it has had such a big run up recently. FTSE up 1/3%, and also we are keeping one keen eye on tariff talk, given we've had a mixed reaction to Nvidia so far. eBay and Dell, of course, Dell coming out a bit later. Any key things that you're watching later on today? What are the key pivot points for you, Patrick?
So tomorrow we get more consumer data, which will be really interesting. So I will look into that. That's the most, and US macro, of course, today and tomorrow.
Right. Thank you very much, and we look forward to talking to you again next Thursday. We'll see you, Patrick. Have a good one.
We all wait for Nvidia earnings. It is Wednesday, February 26, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. The rotating cast of guest hosts continues. This time, Mike Butler in Chicago with us to finish up this hour as we make our way through the most important event of the week, the Nvidia earnings due out in about 13 minutes time. If you're joining us on the website, if you're on the platform, come over to YouTube. Tell us what you're trading today, what you're doing ahead of these Nvidia earnings. If you're already on YouTube, join us on the platform on the website, tastylive.com. See what we're all about. Guys, it was a mixed day. Stocks tried bouncing earlier in the session. We had a little bit of a break out in the Asia and European hours. But then midday rolls around, the markets decide to keel over. We do bounce back a little bit as we go into the close. Ultimately, the S&P 500 up by 0.13%, the NASDAQ up 0.36%, your Dow Jones down by 0.47%, the Russell up by 0.28%. But just because there was some stability in stocks doesn't mean it was ultimately a good day. They are well off their highs. Cryptocurrencies continue to come off the board. Bitcoin down below 85K now. Haven't seen that in quite a few weeks. Other than that, gold, silver do bounce back. The dollar churning through a potential top still as yields continue to break down. 10-year yield closes the year at a fresh yearly low. But that all is just an appetizer, guys. Mike, you are the person among us who trades these earnings releases more than anything else. So let's just get to the meat of it and go to the charts and look at Nvidia. What are you thinking about today's market, the implied volatility that's priced in for today's move? What are you expecting here as we count down the clock?
I expect some craziness. I think it's interesting that the market has been so relatively bearish leading up to Nvidia, but yesterday we saw the big red day. It got gobbled up intraday, and then today we were up like 40, 50. I was like, okay, maybe Nvidia earnings, just blowing out earnings, skyrocketing, could be the catalyst to going back to all-time highs. But we've sold off from the recent highs, and we are in the I don't know range. I feel like the last hour of trading and tape action has really been like just absolute chop. Like we were down 20, we were up 20, we were down 20, and then we kind of closed flat. So I think the uncertainty is there. You had Salesforce come out a couple minutes ago. They gapped down from 307 to 275, and they've rallied to 295 since. So I don't know if that was a misclick by some big player or some knee-jerk reaction either way, but Salesforce, Nvidia, and Snowflake all coming today. Snowflake's up 20 points after the close. That's good for the data people out there. But yeah.
Looks like Salesforce missed on revenue, and that was the on the forecast. So looks like they're expecting to be between 4.5 billion, 4.9 billion, and analysts were looking for 41.3 or 41.4 according to LSEG.
Lovely.
It's nice for Snow. CRM is not having a decent not quite the same reaction that Snow is here. 294, Mike, you mentioned off from the levels closer to 307, 308 into the close. I think 307.47 was that close there. Guys, this is obviously a very important day here. Mike, I described Nvidia as the Atlas holding up these markets midday today. And even though markets come back in, it feels like that Nvidia really still fulfills that role here. Are we witnessing the potential turning point in this AI narrative from your point of view? Or is this another day of earnings releases that we'll look forward to 3 months from now and won't really care about this random February 26th?
Well, Nick and I were calling it Nvidia Day today, so that's officially the name for it. But yeah, I think with such a strong concentration in products like SMH and the Nasdaq, if there's a big move in Nvidia in either direction, it can certainly kind of move the markets to a degree, and then that movement can create compounding movement from there. It's been interesting though to see like products like Apple ripping higher the last couple of days. It's down pretty big today, and you saw a reversal in some other products like Microsoft, Amazon, at least in the morning. So I think you're seeing a decent amount of rotation and churn in a lot of these products, but I think if Nvidia posts a big number or has some kind of headline that really moves it outside of the expected move, I think that could compound into other names, into other sectors as well.
You talk about that expected move. We look at the options chain, looking at $11.30 through, the end of this week. It's February 28th expiry here. So at 132, less than 10% right now on the board. Ilya, I saw a really fascinating chart here today from Warren Pies, if I'm mispronouncing that name, 314 Research, is the amount of availability that for various GPUs that you could rent right now, and those that are currently, those that are on the market, as it were, the percent of minutes where GPU availability is out there for rental. And since the DeepSeek emergence back in January, apparently people are renting GPUs to run training, and they're scaling up. And so this oversupply that potentially we were talking about at the end of last year, are we overbuilding? We're starting to see more consumption come back into the space, which I suppose is ultimately a good sign if you believe in the AI revolution. This is perhaps confirmation bias for my own proclivities. But you think there's a bigger macro story at play here, right? Yeah. Like Nvidia earnings that are bad, if they miss, if they don't hit on the revenues and they don't give us the guidance that the market really needs, which is well beyond what the estimates are, of course,
Yeah.
then this is occurring in the manner which the market's already dealing with a bit of a growth scare.
Yeah. So, two quick things. Just on the renting of GPUs. I mean, obviously, the perspective that sort of feeds the optimism in the narrative, as it were, is that okay, people are coming out, they don't need to spend all of this money necessarily to build out, they can rent, and this will be a tailwind for the sector and the efficiency gains that they portend for the economy and all of these things. Or, and I don't think you necessarily know which one it is at this point, you could say, we have so many GPUs that people can now rent them because we have a situation where they're not being bought up by the people with the deep enough pockets to want to build out capacity. That this is already a sign of oversupply and overbuild. That there are excess GPUs that aren't being gobbled up by everybody scrambling to build their own, and now there is a supply that's available for rent. So we'll see. The larger narrative, I think, as you point out, is the macro narrative, because what Nvidia is at this point, I think, is to a large extent a known quantity in terms of sort of what normal looks like for them. They've been beating by smaller margins over the recent quarters. They managed actually to beat by a slightly larger one, announcement to announcement, for the third quarter, 8.3% beat on the surprise quotient for the EPS. But we're not talking about 29% beat, 18% beat, like what we were looking at in early 2023. So this is a different thing now. I think the markets are looking at this more as a kind of event risk way station. When you get to the other side and nothing shocking has occurred up or down, you come back to what the default is. And the default over the past several months really has been, we set a swing high on most of the indices in early December. We have not made any kind of serious attempt to take out those highs. We're stuck in a range, and more recently we're swinging into the bottom of that range because we got a second consecutive month now, as of Friday, of abysmal U.S. PMI data, in particular for the service sector, showing us that the service sector in the U.S. contracted for the first time in 25 months in February, which is incredibly ominous because the service sector in the U.S. has been the only engine of global growth for the better part of 2 years. I just had a long conversation on Macro Money yesterday about this idea that China is rebounding. People look at the rally in Hong Kong and say, oh, look, we have a rally. China is coming back. Well, no, the numbers are still awful. And when you look at the fund flows, it seems like the rally in Hong Kong is to some extent about DeepSeek, but more so about money fleeing China and people trying to evade capital controls. If there was, in fact, optimism that China is coming back, we'd see money flowing onto the mainland through Hong Kong. And we're not seeing that. So if you look at, for example, ASHR, the mainland index, it is anchored. If you look at FXI, it is surging, but FXI are all Hong Kong listed stocks. This is not mainland. So when you look at what's going on here, you're operating with no safety net. China is anemic. Europe is anemic. That's 2 out of 3 major engines of global growth. The only one that was working last year was the US, and the only reason it was working was the service sector, which is why even Canada, our closest trading partner, literally attached at our hip, could not make hay of US strength because we were not importing goods. So we weren't sending demand out into the world. We were being powered by a service sector mainly serviced by domestic firms. So this is the only real leg on which global growth has to stand on. And then we get the kind of PMI numbers that we got, which means that leg is giving way. How you don't get a global recession in this environment, if in fact what we're seeing in the PMIs holds, and I say if because, okay, 2 data points, 2 PMI numbers. Yes, the CPI numbers confirmed them. Yes, the ISM numbers confirmed them. Yes, the consumer confidence numbers, both from University of Michigan and yesterday the Conference Board, all of that confirms it. Let's get some hard data. Let's get a scary GDP number or something like this. But if in fact the U.S. service sector is giving way like these numbers suggest, I don't know how you don't get a global recession at some point this year. So not surprisingly, that's the story. And if Nvidia doesn't give people enough to basically forget that that's occurring, well, then that's the regular scheduled programming that we go back to.
Mike, we're obviously less than a minute away here. We can see that we're about, 30 seconds away, so hopefully those come out soon. If Ilya's right, then the bond market perhaps should stay on fire. Before we talk about Nvidia real quick, any strong feelings on which way bonds are pointing here?
I think it's been interesting to watch the probabilities of rate cuts going forward. I remember when I was talking to you and Mr. Ratigan last week, we were looking at a 50-50 chance in June of a 25 basis point cut or staying where we are. Now we're looking at a 55% chance of a 25 basis point cut and even a 15% chance of a 50 basis point cut. And going to July, they're basically pricing in a 50% chance that we are at 40425 and even higher, almost double the probability at 30% that we go to 37540. So the movement in bonds, as I'm speaking, Nvidia had a big gap down. It's rallying from that number now. Looks like it's up.
I got the numbers here.
A couple points here.
89 cents on the EPS versus 84 cents expected. So that's a beat. Sales 39.3 billion versus 38.26 billion. That is also a beat. Their gross margins right in line at 73.5%. So Nvidia shares up here a little bit after hours now, 136. Maybe that little sucre that the market needed. We'll wait to see what we get on some of the guidance moving forward. So stocks up about 4% here after hours. Mike, this is obviously good news for a market that needs it right now. Nvidia is the big boy. Do you think that this could be the catalyst, depending upon what happens after the earnings call, that helps revitalize this beleaguered stock market over what's been didn't we just hit all-time highs last week in SPY and triple Qs?
Isn't this funny how the narrative shifts so quickly? You get a 5% sell-off or not even, and everyone thinks the world's crumbling. But yeah, good to see, if you're bullish, good to see the NASDAQ ripping higher. I think it's always interesting to check out some of the potential sympathy plays. So AMD moving a little bit higher. Of course, SMH and these other products that have a lot of Nvidia exposure are going to be moving higher too. But yeah, I think to answer your question, if we see a big rally in the markets tomorrow, a continuation with some of these tech stocks rallying and a big vol crush, I think those three things kind of point to everything's fine. Let's continue on. But I
think if we,
like Ilya is saying, the numbers are not really telling that same story.
Yeah, I mean, to take a look here, I mean, on EPS, right, we were expecting 0.85, we got 0.89. That's a beat of under 5% relative to expectations. That's the smallest we've seen since the last time Nvidia underwhelmed, which was the third quarter of 2022. This is the smallest surprise quotient we have seen in the series of upside beats that we've seen for going on 2 years now. So is this news? I'm not sure.
Okay, so I have more on the numbers here. Their guidance for Q1, revs 43 billion versus an estimate of 42.3. They are expecting their adjusted gross margins to come in 71% plus or minus 0.5%, which is versus an estimate of 72.1. So that's not great. Data center revenues estimates, right, for Q4, 35.6 billion from an estimate of 34.1 billion. That's up 93% year over year. Their professional visualization revenue, I don't know why that's called out, 511 million from 486 million expected.
Is that the video game component?
The gaming revenue is 2.5 billion versus an estimate of 3.2 billion, down 11% year over year. Auto revenues are up about 103% year over year, but only a 570 million line item there. Jensen Huang in the comments says that demand for Blackwell is amazing as reasoning AI adds another scaling law. Increasing compute for trading makes models smarter, and increasing compute for long thinking makes the answers smarter. He also says AI is advancing at light speed as agentic AI and physical AI set the stage for the next wave of AI to revolutionize the largest industries. All that, and we get a lousy t-shirt because it's 132 here in Nvidia right now, basically where we closed. Maybe we were all right, Mr. Spivak.
I'm just going to go on record and say agentic is a stupid name. It should be just agent AI. I was having this debate with my wife the other day, and I don't want to say debate because I don't think she was disagreeing, but she's a big marketer in the tech space, in particular in SaaS here in Silicon Valley, and she was saying that the word they've come up with is agentic AI. I'm like, this is terrible copy. Just call it agent AI. Why do we need to be so complicated?
Agentic
I'll get off my
means
soapbox now.
functioning like an agent. So, yeah, language.
I mean,
is weird.
agent AI just seems so much cleaner.
All words are made up. It doesn't really matter.
I digress.
They typed it into the Google machine and it said, acts like an agent. They said, yeah, that works. Let's run with it.
Yeah, that sounds right.
Like, okay, all right.
But yeah, some people in the chat pointing out volatility's getting crushed a little bit. I think you definitely saw some elevated IV in the VIX futures leading up into these big names announcing. So even with a Nvidia non-move, I think it makes a lot of sense that you are seeing volatility come out of the futures a little bit, just because if they're pricing in a potential surprise, which can always happen for any earnings announcement, even an inside move, if you were expecting a bullish move or bearish move, the fact that the market was pricing in an 11-point move and we are exactly where we closed at 3 o'clock Central, that can crush implied volatility too. It's not always related to a rally. It's more about how is this moving relative to implications. And even if Nvidia opens down a couple points tomorrow, you could still see a big vol crush throughout the day.
Right. That's why when you play some of these earnings releases, I know early on in my trading career I would do rolls of the dice where it's like, oh, I'll buy an out of the money call around an earnings release or an out of the money put, and sure enough, the market moves close to that direction, and then all of a sudden the position is losing money. It's like, wait, why is IV crush? Right. I'm not making nearly as much money as I thought I would, or end up losing some. Vol futures are in here a little bit. During the day, they spike up in the VXH5 contract up to north of 18.70. We're down 17.95. Mike, I guess my question for you is, Victor Jones often calls the 18 to 20 range kind of like the gray area, because you're statistically just as likely to go up another 2 or 3 points as you are to come back in another 2 or 3 points, to go from, say, 18 to 21 versus 18 back down to 15. So we're sitting at 18 on the nose right now. How do you approach an environment where vol is elevated but not super high and has the ability to trend higher from here?
Yeah, it's a good question. I mean, I totally agree. I think when you think of the average implied volatility or VIX, it's around 15, 16. But so we're a little bit elevated from there. But when you look at the difference in the curve from each futures contract, we're still in contango. And as long as we're in contango, I kind of brush off these sell-offs. I will say a couple of days ago, we flattened out a lot. So when the VIX is at 19, you could see 19 across the board in volatility futures contracts. So the H, the J, the K, the M, all those were around 19. Now we're seeing a pretty sizable difference in price, with the H contract being at 17.95 and the M, for example, at 19. So when we're in contango and we're seeing moves that are expected, I think, it doesn't really give me any signals of a larger macro issue, even though I know Ilya is seeing them under the surface. But what I always say is like, okay, if you're looking for something that's really going to change the markets, you likely need to see velocity to the downside and sustained velocity to the downside, not this sell off and then buy it back the next day. And I think if you got that, like if you got 150 point moves 3 days in a row to the downside in the E-minis, you would see volatility in the 20s and you would see that curve flatten out or even go into backwardation. So for me, that's like the signal. If we go to backwardation, that's the signal for me to where we've already seen some velocity to the downside, but that might be a period of time where things are a little more murky and there's a lot more fear in the markets.
And I mean, looking at the S&P, you kind of see it, right? It's down, but it's down within the range that it's been holding for the better part of a few months here. So we're down, but we're not in panic mode.
Yeah.
We're not seeing any kind of a collapse. So the upshot continues to be, I think, if you're near the top of the range in the big indexes, then the risk reward favors a short. If you're near the bottom, then the risk reward favors being long. If you don't have exposure here, the risk reward favors doing nothing. You're not really in a position here where there's much to do. I mean, I guess at 28 IV, you could think about some sort of vol extraction with a condor type structure, but I don't really think the juice is worth the squeeze.
Stocks are up here a little bit off the swing low that we had going into the close, guys. 59.72. That's more or less where the market bounced back to. I think what we saw it squeeze up to 59.78 just as we saw the closing bell. This is an ugly day. I don't know. It feels like even with the Nvidia earnings, this action after hours. I look at the uptrends here over the past few months, Ilya, and while I've been lightly pressing on the long side this year through 2 trades so far, I see this failure up at that 1 week moving average. We couldn't climb over it today. I see us trying to scale the uptrend from the August and January swing lows, and we're not really making a bounce from there.
No.
Momentum's weakening. The NASDAQ is telling you the same story too. I mean, it's just not a market that ultimately is pushing for a significant bounce. Sure, it's an inside day, but like, where's the juice right now?
Yeah. Yesterday's NASDAQ action in particular, I think, is a little bit worrying because what you get is a nominally lower close through the preceding like inner range, if you will. Obviously, you're not approaching those levels below the 2100 level or to 21,000 level rather, where you have that gray line, the kind of larger range bottom, but the inner range right around sort of the upper 21,000 area, 21.5, something like that. That range got those closes with the long wicks going back to early February. You managed to close under them. Those exactly. So if you look at where those closes are on that big red candle, the sort of post deep seek candle, that's a kind of line in the sand there, and we narrowly closed under it yesterday. It's a little bit tenuous, but that's more technical damage than ES has sustained. It's more technical damage than Russell has sustained. This is not great. And if you look at what we're looking at on the current candle, I mean, we just got these Nvidia results. Nobody was apparently sitting there with an itchy trigger finger going, oh, well, as long as these are okay, buy. Obviously not.
Nvidia still 129, 130. It looks like it's going to be that call that moves the market here because we're not really getting much of anything at all. Snow, CRM, those are still proven to be a little bit more active, at least. Snow here up at 181, closed at 166.20. We go over to CRM. This closed in at 307. It's currently trading at 291, so a little bit more direction. Guys, overall, when we talk about this market here today, and I say guys, ladies, and gentlemen, I assume not all men in the audience right now, the sector performance here isn't that great. I count 10 that are positive on the day. Semiconductors did lead up by 2.34%, but it looks like that's an Nvidia bounce back thanks to that Facebook or Meta data center announcement, $200 billion being invested for a new data center that was previously not known. Maybe we could look to XLP being the weak one here today, Ilya. Hey, Staples, which had been doing really, really well the past 2 or 3 weeks. This is a defensive sector, so it does come off the board. XLV healthcare is also weaker, down by 0.72%. So there's a modest retreat from defensive names. But I don't think this is anything to write home about. I mean, 15 of the 25, we're still in the red. And the sector rotation on balance for the past 5 trading days has been more late cycle equity rally than early stage equity rally.
Yeah. Yeah, I mean, if you take a look at what is going on here, I mean, this is not anything like people going, oh, shrug it off. This is not a problem. As we'd seen a lot of, we very much were in this mode before where, okay, there's been some bad news. Okay, there was a little baby sell-off, but there's growth, everybody. It's okay. So you lost some money today, but you'll make it back tomorrow because the economy is growing and people are getting hired and they're going to spend. And when they spend, then there'll be earnings. And when there's earnings, there's all kinds of good things happening. And so you can make whatever money you lost today back tomorrow, as long as the prospect of future money remains. Then la-di-da, everything's okay. Buy the dip. And by the way, doesn't hurt that the Fed is out here saying, yeah, you know, we got to cut a little bit, but it's not for bad reasons. It's because inflation expectations have come in a lot. If we look at what happens to real interest rates when that occurs, then we don't want to let nominal rates out of whack, because if we don't move down nominal rates to line them up with inflation expectations, then real rates surge and we crush the economy. It's not what we want to do. We don't want to make real cost of borrowing net of inflation surge. Well, that's going to ruin our soft landing. So we're just going to cut a little bit because inflation expectations have been coming in, because we've been successful at beating inflation back. All good news. So cheaper money downwind, and there's growth. Let's all hold hands and sing Kumbaya. All great until the growth goes away. Because then debt to GDP ratios go up and financing starts becoming an issue after a big rate hike cycle with lots of debt rollover on deck this year and next. And people start to get skittish. They go, well, if there's no growth, then maybe there's a hit to earnings. Then maybe I don't get to make tomorrow money. Let me not part with today money or even put it at risk. And so you get this sort of general defensiveness when growth goes away. We talked on last call, just a half hour ago, about this idea that the market is developing a default, and that default seems to be pointing down in the recent days. And if you then get Nvidia earnings that don't change fundamentally what the landscape is, you just go back to default. We'll look at Nvidia now. We'll look at NASDAQ now. What are we seeing? Back to default.
Yeah, so the growth names today, even industrials, they up by 0.09%. But again, you look at that candle, we gap open higher, we try to trade higher, we end up moving lower over the course of the session. Mike, what's your take on what's happening in the crypto space right now? It feels like crypto winter may be starting to set in again. Even as stocks churn, the coins are getting killed.
Yeah, I think it's always worrisome when you see consecutive big red bars like this, but it hasn't been too different from the E-minis or NASDAQ, where we tried open higher, but we closed lower. Bitcoin is the same story, but the last 2 days has been really interesting. It's the first time we've gotten below 85K since the initial post-election ripper. With that said, Bitcoin's implied volatility is significantly more than the NASDAQ and E-minis. So over the next 30 days, we're pricing in a range of plus or minus 10K. If you look at where we were trading a couple weeks ago, we were between 95 and 105. So really, if you think about that, back then we would have had a 10K range as well. We're just at the lower bound of that implied range. So IV rank in Bitcoin sitting at 9. Implied volatility is on the lower end of the range of where it's been, but it's still at 66%, which is a big number for a product in general. So I think if you've been looking for a time to get into Bitcoin, obviously this is the lowest price we've seen, but we're not really seeing too much of an implied volatility shakeup. And this could be just in line with everything else, where when you see bigger moves than you might think you would see in products like Microsoft, Amazon, Apple, Google, you should expect to see similar moves or more volatile moves in Bitcoin just because of the nature of the beast. But I don't really see anything shifting too dramatically under the hood here in Bitcoin, but you should expect to see these volatile moves because we get 20% weeks pretty regularly in Bitcoin, even though it doesn't feel like that.
It's been one of those weeks, right? A few days ago on the 21st, we were north of 100K, so now below 85. It's a 15% move in 4 days. That certainly stakes out some weaker hands. Guys, go over to Coin right now. Now, it's always odd when you get a mobile alert from your bank and it's like, hey, here's the text code for the account you're trying to sign into. It's like, well, I'm currently on air right now. I'm not trying to sign in anywhere. So going to have to address that. Coin 212.96 up by 0.22. Some of these names that are kind of mirror images of the space, I mean, philosophically right now, it feels like the names that are associated as proxies, they're rallying up a little bit. But when Bitcoin's coming down, they're getting hit a lot harder than everything else. So, Mike, what's the case for getting long deltas in Riot or Coinbase or anything, knowing that the rallies are shallower than what's happening in BTC?
Yeah, I like that idea. I mean, we've seen that before in the NASDAQ and other products where you see pretty broad-based sell-offs, and then you see a product like Nvidia that's not moving, which makes me believe if you see a reversal of that move, you would probably hang your hat on the product that didn't go down or didn't move in a favorable way for that to reverse. So MicroStrategy is another one. Someone in the YouTube chat pointed out that MicroStrategy is rallying into the close, which it did. But into today's move in Bitcoin, when we were down 4 or 5K, MicroStrategy was pretty flat. If you're looking for a roller coaster ride, MicroStrategy is probably where I'd go, especially because when you look at implied volatility in MicroStrategy, which has actually kicked up a little bit, IV rank of 33, you should expect to see IV around 100 in this product. But a couple of weeks ago, it was in the 70s when we were just chopping around and not moving. So MicroStrategy, high leverage play. It's basically a volatility product of Bitcoin, if you want to think about it that way. Implied volatility explodes to the upside if you get continuous movement to the upside. Coinbase is another interesting one. And Coinbase, I think, is if you're agnostic to the coins themselves, but there's just if you think there's going to be more activity trading in Ethereum, Bitcoin, Solana, what have you, Coinbase, I think, is a more conservative way to approach that, since you're getting more volume flowing through there. But yeah, I would say Bitcoin futures, micro Bitcoin futures, IBIT is my preferred method. IBIT is my year-long trade for 2025, so I have a strangle on in there that I'm leaning up to the upside in. and I'm just going to have a strangle on in there all year. And it's a $50 product now, and it's basically tracks Bitcoin in lockstep, the percentage change in Bitcoin in lockstep. So if you're looking for a way to not have to work through crypto wallets and all those things, IBIT's an easy way to partake in that. And that has high implied volatility. And most importantly, it's a $50 stock, so you can really do whatever you want in there from an option strategy standpoint.
Ilya, it feels like this is a trade that's killing over quickly. If we were ticker agnostic, that looks like a heck of a top that's coming together, at least for the short term right now. It's not.
Yeah.
Go ahead.
I mean, we talked about the range break earlier this week, right? We were looking at BTC futures and essentially saying, well, look, if you know nothing, if you ignore what the ticker is, what did you see this week? You saw a range that's been holding since early November, let's say, and good night. That range is gone. So if you knew nothing about anything, you would just say, okay, technically speaking, if you're any kind of a chart watcher, any kind of a tape reader, one of these is not like the others. When you look at moves into 90,000 here over the past, 3, 4, 5 months. And that told you. And I've, in the past, been kind of skeptical of using technical analysis on Bitcoin, just because technical analysis, much like any kind of statistical anything, needs a good sample space and so needs liquidity to work really well. Things get very choppy when you look at technicals on illiquid things. But I think with the advent of Bitcoin ETFs, this is safe analytical ground at this point. These things are like Bitcoin itself, I think, is liquid enough to where there's enough hands in the pot that you can expect that technicals should have fairly solid follow through. I mean, it's not the Euro or the S&P, but it should work reasonably well. Here we are. In my mind, technical analysis is most powerful when things are really obvious and everybody is looking at the same thing, because you don't really need for the technicals to have any empirical power, any intrinsic validity. Who cares? The bottom line is there's a range. That range has a line under it. If everybody is looking at the same line and you go under the line and everybody goes, oh, it's under the line, something is different, sell. Who cares if the line had any kind of validity or you believe or don't believe in technical analysis? That's irrelevant. If everybody is looking at the same line and is going to sell under it, then it's going to work. And that's the level of maturation that it seems like we're looking at here, and Bitcoin is the weaker for it.
I would point out that if this is a measured move top, that gives you a destination perhaps close to 70K, depending upon where you draw your neckline. If you want to be a little bit more conservative and use the swing low from the third, it's going to give you somewhere closer to 74. And quite frankly, that seems reasonable, right around the highs that you have back here in March of 2024. I think that you make a good point. I mean, you can't really do fundamental analysis on cryptocurrencies, not traditional fundamental analysis anyway. You're going to use on-chain metrics, transaction counts, transaction values, active addresses, fees paid, hash rate, and staking. If it's a coin, it's a project metric like the tokenomics and initial distribution. And then maybe you could look at market cap, liquidity, and volume and some of the supply mechanisms. But like traditional fundamental analysis, there's no balance sheet for you to pick apart. Right. And so I've just found in my conversations with crypto people over the years, they've really leaned into TA more than anything else because it's a ticker on a chart, right? Like at least there's that universal set of principles. There are candlesticks. We can slap moving averages on them. Like we don't need to agree about what kind of on-chain metrics that we need to follow here. That actually means I think a technical topping pattern in crypto carries more weight than like a single stock name, because Apple could just throw in hey, big earnings release. Hey, a new product. Hey, they finally got AI to work on the iPhone 16. That could change the narrative in a heartbeat. Whereas Bitcoin doesn't necessarily have that going for it because there is no, cash flow bringing in new nodes or increasing the speed of the Lightning Network. Like, those are nice things for people who use it, but I don't know if they break the public zeitgeist for actually increasing demand within the product itself. Either way, though, it's tough skiing right now. I mean, it's tough skiing for risk across the board, I think, is the important thing to note. We were talking about bonds briefly before Nvidia earnings came out, and this has been one of the few things that works if it's the ZN calls or for some people still in the short ZB put spreads. We now see a 10-year yield that's down to 4.251%, Ilya. Okay. Should we be screaming with our hair on fire now? This is about 50 basis points lower in the span of a week and a half. Not quite there yet, but that's a lot in a short period of time. That typically does not happen.
No. And this is, I think, emblematic of the kind of move that you're seeing. I mean, for the record, I'm back long a TLT vertical as of yesterday. It's working so far. And I think this is part and parcel of this growth narrative that we've seen occurring. I mean, if you look at the front end of the curve and the back end of the curve, one of the unique things that we've seen happening recently is a more dovish view is coming into both. We'd been watching a 2-year yield that's done basically nothing going back to November. And of course, it's done basically nothing, because Fed policy expectations have been remarkably stable since November. The Fed had their big dovish jump in September, 100 basis points in 2025, 100 basis points in 2024. By the way, here's half of that 100 basis points up front. We're cutting everybody. It's all the things you've been calling for. And the market goes, yeah, that's too much. You've gone too far. And then when the Fed comes out in November, by then the markets have already shifted the yield curve to a much less dovish setting. Fed basically endorses that after the election in November. In December, they make it official with the new SCP. But by December, the Fed funds futures curve isn't really moving anymore. It's kind of wiggling back and forth a little, 20 basis points here, 20 basis points there at the tail end. But none of the big tectonic revision from September into November. And so then you look at the 2-year and you see from November onward until basically this week, it's not really going anywhere. All of the action is happening at the long end. And that's because anytime you get a piece of data that's good, bad, whatever, markets go, okay, one fewer cut in 2025, so one more in 2026. Or one fewer cut in 2026, so one more in 2025. And the aggregates don't move around. This week, in the wake of Friday's PMI shocker, all of them, the entire curve, is moving to lower rates. We're going to have lower rates this year. We're going to have lower rates next year. This is a market that is actively baking in, seemingly, a Fed that has to respond to a growth scare. And that's different. That's a meaningful departure. That's not maintenance cuts anymore. And so, not surprisingly, bonds are going up across the board here.
You know, I want to cover that topic that you just mentioned there. You brought up the word, and it's so crazy that you read my mind, because the spreadsheet that I have open here is on the very topic of the types
we've
of
only
cuts.
been doing this together for over a decade.
So I would point out, this is a spreadsheet that we looked at back in September when the Fed started its cutting cycle. And it was what happens under various cutting scenarios. Is the Fed cutting for a maintenance reason because inflation's come down and they can afford to take their foot off the brake? Is it for an emergency reason like COVID? Something's hit the fan, they got to respond, unforeseen. Or is it just because of your garden variety slowdown? The economy is going through a recession and they need to cut rates. So when we talk about it being a maintenance cut, this is actually a pretty good situation for stocks, right? The maintenance cuts here, you're looking at positive gains 3, 6, 12 months out. But when they're recession cuts, the 1 month, 3 month, 6 month, and 12 month return, they're all negative. And if we're just looking at non-maintenance cuts, because emergency is a little bit different, stuff hits the fan the first month after the maintenance cut, but then the Fed's here to save the day, so then the markets quickly rebound thereafter. But I would point out that if it's not a maintenance cut, or if it's for a recession, you're probably looking at a window where if those rate cut odds are being pulled forward once more, and yields are going down and stocks aren't going up, it's because the market's changing its interpretation of why the Fed has cut rates and why the Fed would be cutting rates moving forward. No longer is the Fed cutting rates because it's declaring victory. It's cutting rates because it thinks the economy is going towards recession. And that's a totally different ballgame for being long equities, as was the case last year. 23 and 24, the whole game was as long as the golden goose remains, labor market's stable, inflation's coming back towards the target, growth is still positive, don't worry about anything. Kind of just shut up and buy stocks. But that's not the backdrop that we're seeing play out right now. And the narrative is shifting. So Nvidia, if you want to be a catalyst today, you've only added $1 here after hours so far, with about, we'll call it 34 minutes on the other side of the earnings release. Mike, is this shock you that the market was priced effectively right? I can't think of the last time we had an Nvidia earnings result where we were basically pinned as such.
Yeah, I hate this move because I told Nick on the show today, I was like, there's no chance it's going to open right at 1:32 in the morning. And now here we are. But when you bring up that chart and you put it the way that you put it so eloquently, if you think about the fact that the market always knows, like the market's going to move first and then the narratives come out, it does kind of make sense then that you have these frothy names that have had extreme moves to the upside, like Microsoft, Google, Amazon, your big tech stocks, Nvidia, and then you have your extra frothy product, Bitcoin, that was up, over 50% from pre-election to post-election, and now you're seeing a lot of that price come out. If these movements are kind of leading towards what you're speaking about, and we should expect to see some kind of neutral to downside move going forward this year, and people are getting ahead of it, it could be what you're seeing in the markets for sure. And the lack of ability of some of these products that everybody used to just gobble up, like Nvidia, the inability for Nvidia to have any kind of substantial or sustained move to the upside, I think kind of just adds to that.
It's like such a different cadence. It's like, oh, rates are going lower. Inflation's going to be defeated. Let's pile into the risk, right? The Fed's going to start cutting. Bitcoin goes up. This time around, it's not that way, right?
No.
Rates just closed on their lows. The market is telling you that credit conditions should be easier. Liquidity conditions should be more plentiful. And yet the risk assets are still being jettisoned. I would look at XRT, which is really interesting because, as we've noted numerous times, it's the ETF that tends to be most sensitive to growth conditions. And so when recession sets in, this tends to be the biggest loser. I suppose it's worth tapping on that again because XRT is down 1.19% today, a more substantial loser leading to the downside. Just like we would look to, a name like XLY, for example, consumer discretionary up by 0.38, and that's just really ugly down here. We can't pivot back through the January 13th low. Struggling now 3-4 days down here, guys. Whether or not we're looking at a late July type of setup in equity markets is a different story. There doesn't seem to be a carry trade component this time, Ilya. I don't see anyone chirping about BOJ rate hikes and that potentially destroying the market. Is there anything in the world of FX or international markets that we need to review here before we close the door on this Wednesday session and all tune in for our Nvidia earnings call with Jensen Huang?
Don't listen to the earnings call. Listen to Macro Money right after this show, where we're going to talk about the international component and the euro, because it's kind of a little series we're working out this week. On Monday on Macro Money, we talked about why the U.S. service sector numbers were so scary and why this is a recession scare. Yesterday, we were talking about, okay, well, if the U.S. is having a recession scare, who can backstop it? Is it China? That's the other big engine of global growth. And the answer is, well, don't look now, but the rally in Hong Kong is not the rally you think it is. It looks more like money running away from China, not money optimistic that China is coming back. Oh, and by the way, 7th consecutive quarter of deflation economy wide. No, China is not going to save the world economy. The third main engine is Europe and the Eurozone in particular. So if you take a look at the euro here, what you find is that you have basically these repeated knocks on resistance over and over and over again. Now, the ECB is supposed to be the most dovish central bank this year. They're on course for 80 plus basis points and cuts. So call it 3 with a chance of 4. So this should not be going up. Why is it going up? And why is it holding? Why is it not selling off? And that's really a story about they're not going to cut anymore because, interestingly, Eurozone inflation is actually going higher. And it's not going higher for good reasons. Yeah, okay, you can make all kinds of offsides here about energy is a bigger contribution, there's more uncertainty, maybe tariffs, this, that. The bigger issue is we're expecting Eurozone CPI to be 2.5% when it comes out next week. As of December, 50 basis points or half of a percentage point of Eurozone CPI was hospitality and recreation in an economy that's stopped, that hasn't grown in months, not with any kind of vigor anyway. PMI is basically flat at 50. So why is it that these discretionary areas of the economy, why aren't they feeling the pain and disinflating? Well, maybe it's because the inflation is stuck in labor markets. So the ECB does not have room to get any more dovish. But if the picture on the Fed is getting more dovish, then yield spreads move and the dollar starts to weaken in relative terms. So I think the story you're getting in FX here is there's maybe not meaningful changes,